Hello students, welcome to the amendment lecture of CA Final Indirect Taxes for May and November 2024 exams. So my dear friends, in this particular amendments, the statutory update released by ICAI, there are few amendments which are very important for your exam. So I have given the serial numbers for the amendments as well. So there are 43 amendments around, so we can just quickly finish those amendments. And also these amendments will be relevant for you for both May as well as November 2024 exams, right? And I just wanted to tell you one thing, in this particular lecture, from exam point of view, I didn't feel like anything like from customs duty, which is that greatly relevant amendment to discuss. So that has not been taken into consideration. Hardly some 2-3 changes here and there, the procedural changes, which are not at all relevant for your exams. So nothing to worry. So purely the the amendments which are related for your May and November exams with respect to GST is what we are going to discuss in this video, right? So without wasting much time, let us proceed into the video. So the amendments chapter wise have segregated them as per the ICAI study material, and we have given the numberings also for the amendments. So let us see first amendment. So chapter supply, amendment number 1, a very simple amendment, nothing but, as you all know, there is schedule 3 which is dealing with neither supply of goods nor supply of services. That means any transactions which are given in schedule 3 which is neither supply of good nor supply of service, it shall be treated that way. And in that there is one point, there is entry number 6. It says actionable claims are neither supply of good nor supply of service, but other than betting, gambling and lottery. This was the previous one. Now recently they have changed a small thing in this. So they have added, instead of the words other than lottery, betting, gambling, they have just used the words other than specified actionable claims. Simple, my dear friends. In this particular amendment, earlier lottery, betting, gambling alone were treated as supply of goods. Remaining any other actionable claim will be treated as not at all a supply, that is falling under schedule 3. Now they have just replaced these words lottery, betting, gambling with the word other than specified actionable claims. So their only intention is to add 3 more things. So the net effect of the amendment is, sir, now lottery, betting, gambling earlier were treated as supply. Other than that, any other actionable claim is not at all supply. But now lottery, betting, gambling, where do you play them? Sir, you can play them in casinos, or you can play them even in online. And horse racing. So that way you remember. So lottery, betting, gambling, casinos, online, money gaming and horse racing. So these 6 activities are alone now called as specified actionable claims. Specified actionable claims. So if you deal with these things, then it shall be treated as supply of goods. It shall be treated as what? Supply of goods. So that is the only change here. So any other actionable claim other than these things is not a supply. So the specified actionable claim has been defined, and when you are talking about online money gaming, they have defined what is online money gaming. Obviously we all know what is online money gaming, sir, where we make this play these online games with money. And they have said here not only the physical money but also the virtual digital assets. That means we can say they are cryptocurrencies, etc., etc. So for that they have given the definition of what is online gaming, sorry, and what is virtual digital asset, which is not at all like that greatly relevant. So just remember, sir, the amendment here, amendment number 1 is nothing but earlier lottery, betting, gambling were treated as supply, any other actionable claim is not a supply. Now lottery, betting, gambling, online money gaming, casinos, horse racing, 6 activities are supply, any other actionable claim is not at all a supply. Simple. That is what amendment number 1. Hope it is clear. So for that, specified actionable claims has been defined. For that purpose, online money gaming has been defined, and for that purpose, online gaming has been defined, and for that purpose, virtual digital asset has also been defined. So just you can read them once, and not that greatly relevant for your exam. Let us proceed. I mean, these definitions are not that greatly relevant. Just you remember these 6 items. Right. So that is what amendment number 1 for you all. Right. So let us move on to the next amendment, amendment number 2. Guys, and for this purpose they have just added this proviso below, amended this proviso below this supplier definition, where they are trying to tell us people providing these activities the specified actionable claims, they are also called as suppliers. So nothing relevant here. So let us not waste our time here. Now let us move on to the second amendment. So hope you are clear with amendment number 1. So now amendment number 2. This amendment number 2 is again a very simple amendment. Nothing but, see, there was a doubt regarding when you are going and buying this food and beverages in cinema halls, how to tax them. So that was the doubt. Further, the department has given a clarification saying that, see, normally when we are going for movies, see, how do we book the tickets? So please understand, my dear friends, here the point is you are booking the ticket. So when you are booking the ticket, through Book My Show, etc. kind of things, when you are booking the ticket, there will be one more option, add the popcorn, add the Coke, all these things. So along with the ticket, when you are purchasing, if you are also buying the food and beverages, then you know obviously in the single invoice they are charging for the ticket as well as they are charging for the food and beverages. So they have clarified, if that is the case, then treat it like a composite supply. And whatever is the principal supply, what is the principal supply there? Exhibiting the cinema halls. So the transaction will be treated as service of exhibiting the cinema hall. That means if you are purchasing a ticket for 100 rupees, in that there is ticket price 100 rupees and also some 40 rupees popcorn, etc. you have paid. So total you have paid rupees 140. This 140 will be treated as supply of exhibition of cinema. Services of what? Exhibition of cinema. So the tax shall be charged accordingly. No sir, I am not booking the food and beverages, popcorn, samosa or all this stuff when I was booking the ticket. So I am a very active fellow. While the break when they have given in the movie, like during the intermission, I am just going there and like buying this food and beverages separately. If that is the case, then that means what? They are charging them independently. So the invoice they are charging is like 40 rupees separately for this and 100 rupees for the movie ticket separately. Then this 40 rupees will be treated as restaurant services and this 100 rupees will be treated as exhibition of a cinema. So that is how the tax treatment is. So simple, you are charging them independently, separately. Then obviously the food and beverages, whatever you are buying in cinema halls, will be treated as restaurant services. And that movie ticket separately it will be taxed. No sir, they are not billed or invoiced separately, then it will be treated as a composite supply. What is the principal supply here? The principal supply here is exhibiting the cinema. So the entire transaction will be treated as supply of exhibiting the cinema services, right? So that is what amendment number 2. Another simple clarification. This is not an amendment in the law, this is just a clarification given by the department, right? So let us move on to the next amendment, amendment number 3. So what is amendment number 3? So amendment number 3 is also again a simple clarification here. So my suggestion is, don't worry about anything, just understand. See, there is a SCAC entry 997171 in the SAC classification. You know the goods and services are classified. Goods are classified based on HSN and services are classified based on SAC. So in SAC there is an entry number 997171. In that the entry is like this, my dear friends. Services provided by holding company, that is holding securities of companies and enterprises for the purpose of owning a controlling interest. So take it that way. So or any other equity interest. Okay, so there was an entry like this. Now people got a doubt that, sir, whether the holding company is holding the substantial interest, that is the equity in the subsidiary companies, will it also amount to supply? So that was the doubt. Understand, when they were making the law, they made this classification, and why they made this, God knows. So the department has clarified, arey yaar, just a holding company is holding some shares in a subsidiary company. What is it they are supplying there? Are they supplying any goods? Are they supplying any services? No. That means you cannot call it as a supply. Holding company is supplying any goods to subsidiary company, or holding company is supplying any services to subsidiary company, then you can say it is supply. But here just holding the equity, You cannot call it as a supply just because there is an entry in the classification. So the department has clarified the activity. So only this paragraph is important for you for your understanding, that is the activity of holding shares of a subsidiary company by whom? By the holding company per se cannot be treated as supply of services. That is what the concept. And obviously, sir, any transaction happening between them, that is the holding and subsidiary company, and which is satisfying the meaning of supply, will be treated obviously as a supply, right? So that is what the point. So mere holding of the shares in the subsidiary company is not a supply. So that is amendment number 3. So that is already I told you that is just a clarification. So in this chapter, that is supply, we have discussed 3 amendments. Number 1 actually the amendment, 2 and 3 the clarifications, right? So let us move on to the next chapter, charge, right? So in this chapter, what are the amendments we are going to see? So first let us go with the amendment. So amendment number 4. So now coming to the next amendment, amendment number 4. So my dear friends, here the interesting amendment here is, obviously you know, when any goods are imported into India, when any goods are imported into India, we will levy what? Sir, we will levy obviously customs duty. We will levy customs duty. But now we have amended section 5 subsection 1 proviso of IGST Act in such a way that where this proviso says government can notify certain goods. Government can notify certain goods. Listen carefully. So whenever the goods are imported in India, obviously we are going to charge basic customs duty, IGST, the other things. Fine. Now government has got the power here to notify certain goods when they are imported to India. The taxes shall not be levied as per the customs law, but as per IGST Act. So the government has amended the section 5 subsection 1 proviso in such a way where government can notify any goods which can be imported into India, on which we will not charge taxes as per customs law, but we will charge taxes as per GST law. So that is the amendment here. Now why this amendment has been made? Now mainly the reason is the importation of goods, and you know we have seen in the first amendment that specified actionable claims are now called as what? Supply. Specified actionable claims, and if you understand, goods definition includes actionable claims. That means specified actionable claims are nothing but goods. When in India, if you are importing the specified actionable claim of online money gaming. So importation of specified actionable claim of online money gaming will be now taxed under IGST as import of goods without applicability of customs duty. That means now simple, what is the impact of this amendment? Simple, amendment number 4 says you import online money gaming, and online money gaming is a specified actionable claim. Actionable claim is a good. So if the goods are imported, obviously customs duty will come into picture. No sir, it will not come into picture, only IGST. So if you are importing, what is that you are importing? Sir, if you are importing what? Online money gaming, and understand this online money gaming is goods, and if you are importing these goods, now there is only IGST, no customs duty, no customs duty, no customs duty. No customs duty. Simple amendment, amendment number 4. Am I clear? Shall we proceed? So that is what amendment number 4. So let us move on to the next amendment, amendment number 5. Sir, what is this amendment number 5? This amendment number 5 is regarding the services provided by a director to its company. My dear friends, if you remember, director providing services to the company is covered under reverse charge mechanism, provided the director is not an employee of the company. And if you understand, we have discussed in classroom also, like, so director services, first director, if he is an employee, it is again neither SOG nor SOS, that is neither supply of good nor supply of services. So if the director is not an employee, how do you identify whether he is an employee or not an employee? TDS under section 192 or 194J. So if the director is not an employee, then again we will see whether this person is a director in a body established by central government, state government or local authority. If you remember schedule 3, then also it is neither SOG nor SOS. But sir, director is not an employee providing services and is not a director of any central government or state government or local authority organization. So let us assume he is a director of TCS company or a director of a Infosys company. He is providing his services as a director. Then obviously on that director's remuneration, company has to pay GST and the reverse charge mechanism. So that is clear. Here what is the amendment is, sir, if he is providing any services in the capacity of a director to the company, then okay, fine, reverse charge mechanism will come into picture. But if the director is providing something in his personal capacity or private capacity to the company, imagine the director is owning a building, a flat. So that flat he is renting to the company. And what is happening? The company is paying rent to the director. So that way he is providing the flat on rent to the company in his personal capacity. That is not a service he is providing as a director to the company. As a director, my duty is what? To rent the immovable property to the company. Huh? No. So obviously this is something which I am providing in my personal capacity or a private capacity, but not as a director of the company. So who is liable to pay GST here? Sir, here reverse charge mechanism will not come into picture. That means, simply understand, see, reverse charge mechanism may come into picture based upon various other entries. But the entry which is talking about director providing services as a director to a company, that entry will not be applicable here when the director provides any services to the company in his personal capacity or a private capacity. If he is providing his services as a director of the company, no problem, happy, the director remuneration, or even if he is an employee, if he is charging some board meeting sitting fees, all these things, then RCM will happily come into picture. But anything else he is providing in his personal capacity or private capacity, reverse charge mechanism will not come into picture as per this entry. Okay, so that is what amendment number 5. Am I clear, my dear friends? Am I clear? So that is what the concept, right? So let us move on to next amendment, amendment number 6, right? So amendment number 6, page number 6, very easy one here, not that great concept or anything here involved. If you remember, this amendment is regarding reverse charge mechanism, which is the services provided by government. If you see, the same thing we see in exemptions also, government providing services to anybody, the postal department services or any other transportation of passengers, all these things. So that exemptions, if you remember, so this is connected with exemptions. So I'll just take you through this exemptions chapter. I'll just make sure you recollect this exemption, entry number 6. So you know, government services are exempt under GST. That is, the services provided by central government, state government, union territory, local authority are exempt from GST. Any services provided by these people are exempt from GST. Hope you remember that. But other than postal department services, aircraft or vessel related services, transportation of goods and passenger services, or any services to a business entity. So hope you remember this particular entry. That means these are taxable. Any other government services are exempt, if you remember. So any other government services are exempt, but there are some services which are taxable, and this services which are taxable has been connected to reverse charge mechanism also, if you remember. So that means there are government services which are taxable as well as exempt, and whatever taxable, and you might have seen, sir, they are taxable under reverse charge mechanism also, they are taxable under forward charge mechanism also. I just don't want to revise those concepts for you here, and I don't want to waste your time. I just want to tell you the amendment here is, next to this word services by the Department of Post, they have just added the word and the Ministry of Indian Railways. Ministry of Railways or Indian Railways. So that word has been added in the exemptions. So these people providing services will be what? now taxable. Here one interesting thing I just want to bring to your notice is, please understand, sir, transportation of passengers through economy class, transportation of passengers through sleeper class or economy class, still these things will enjoy the exemption under various other entries, if you remember. So here they are trying to tell any other services provided by Ministry of Railways, that is Indian Railways, taxable. But sir, for transporting the passengers, transporting the goods, there are exemptions in different entries, if you remember. So metro rail, monorail, tramway, all these things are still exempt. They enjoy the exemption. Any other services provided by Ministry of Railways, Indian Railways, that will be taxable. So generally their services are taxable, but if any entry is giving you exemption, please enjoy that exemption. Okay, so that word of Ministry of Railways, Indian Railways has been added everywhere. Apart from that, there is no other amendment. So government services, you should have read that government services along with exemptions and RCM, comparing them, and that is how we have discussed in the class also. So the simple thing here is, sir, government services we have seen taxable as well as exempt. Whatever is taxable, we have seen where reverse charge mechanism will come, where forward charge mechanism will come also, we have discussed in the class. So the point is, I am just discussing here the amendment because it is the amendment there. So the amendment is simple, they have just added this word Ministry of Railways, Indian Railways, everywhere, wherever there is postal department. Okay, next to that they have added this. So I repeat, Indian Railway services are generally taxable, but we can enjoy the exemption in any other entry if they have given. So there are other entries which are giving the exemption for sleeper class, economy class, monorail, metro rail, tramway, all these things. There we can enjoy the benefit. And also there is transportation of goods exemption also, if you remember, agri produce, milk, salt, food grains, all these type of things, if you remember, there also there is exemption. Yes, let us enjoy that. Okay, so there is what the case here. Now the point here is, so the relevant amendment even in reverse charge mechanism also they have done. So that amendment is nothing but, so earlier you know, entry 5 and 5A of reverse charge mechanism, government services are taxable. If taxable, they are taxable under reverse charge mechanism. They are taxable under reverse charge mechanism, excluding renting of immovable property. And for that also there is one more entry, entry number 5A, that we will discuss. Guys, I am not touching or I am not revising reverse charge entries or exemption entries for you. Please understand that, assuming that you have already revised that and watching this lecture. Okay, so I am just trying to bring out what is the change. The change is just to the postal department services. Next to it, they have just added the word Ministry of Railways, Indian Railways. Here also in entry 5A, they have said services supplied by central government excluding Ministry of Railways, Indian Railways. This is what I feel important now here. So that means what they are trying to tell is, if Indian Railways let us assume they are renting a shop to you, they are renting a shop to you in the railway station. In the railway station, let us assume for a sole proprietor, Mr. Solo, for his shop. So who is liable to pay GST here? Sir, normally government providing renting of immovable property to a registered person, reverse charge mechanism, unregistered person, forward charge mechanism. But here Indian Railways providing renting of immovable property is forward charge mechanism, no matter whether this person is registered or not, irrespective of his registration status, irrespective of his registration status. Okay, so that is what the amendment. So please mark it important, remember. So hope you have revised and remember that, like, government providing renting of immovable property services to any person registered under GST, reverse charge mechanism. Otherwise, if the recipient is unregistered, forward charge mechanism. But for Indian Railways, that is not applicable. So for Indian Railways, it is renting the immovable property. Then whether the recipient is registered or unregistered, it is forward charge mechanism. Hope it is clear for you. So guys, I'm again trying to summarize this entry. See, we have seen the amendment. We are seeing the amendment number 6, the amendments whatever has happened in reverse charge mechanism. So in this, I'm just summarizing you. See, government providing services to business entities are taxable under reverse charge mechanism, but other than renting of immovable property and these services. So these services are always taxable under forward charge mechanism. But we have also seen, sir, government renting immovable property to business entities registered under GST, then it is coming under reverse charge as per entry 5A. But this entry 5A is not applicable for Indian Railways. So Indian Railways renting immovable property, no matter whether the recipient is registered or not, it is coming under forward charge. Hope it is clear for you. So let us move on to the next thing. So here one more interesting thing is, with effect from 1st October 2023, sir, there is an amendment here regarding one reverse charge entry has been eliminated from IGST Act. This is again having connection with exemption. So I will just take you to exemptions chapter and I will just show you that, and then I will bring back to reverse charge mechanism. So if you remember, in exemptions IGST category, normally if the service provider is located in non-taxable territory and is providing any services, then so you would have seen any person importing the services from non-taxable, obviously importing the services means from non-taxable territory only will do that. And if that is done by government or any individual, that is importation of services done by government or individual for any purpose other than commerce, industry, business or profession, there is exemption here, and it is done by any entity registered under section 12A also, then they enjoy the exemption. Or this online educational journals and this things by a person located in non-taxable territory. Supplier is also non-taxable territory, recipient is also non-taxable territory. All these cases, there is an exemption. Here one small thing is, like, it is not about them, but it is about, there is an exception below that. So that says the exemption shall not apply to OIDR services, if you remember. And also the exemption is not applicable to services by way of transporting the goods by a vessel from a place outside India up to the custom station of clearance in India. So earlier these two were taxable earlier. Remaining these things, guys, I am strictly confining myself to the amendment. I am not again elaborating or discussing background of this concept, nothing, because assuming that you have revised this topic. Okay, so these people were enjoying the exemption. Okay, so earlier these both were taxable, but now the situation is different. This OIDR services fellow is only taxable and this fellow will enjoy exemption. Who is enjoying exemption? This is important, my dear friends, for you from exam point of view. So this is important for you. So who is enjoying the exemption? Simple. If you are receiving the services from a person located in non-taxable territory, what services? Transporting your goods from outside India to India up to the first customs port, then transporting your goods from outside India to in India from non-taxable person located in non-taxable territory by you who is located in taxable territory is now exempt under GST. Earlier it was taxable under reverse charge. I repeat, listen carefully. See, earlier when you are bringing the goods to India, sir, when you are bringing the goods to India, transportation of goods by vessel. Who is providing? The supplier is in non-taxable territory. But where is the recipient? Recipient is in taxable territory. So can I call this as importation of service? Yes, sir. We can call it as happily importation of service. And importation of service, earlier it was taxable and hence the recipient was liable to pay GST. But now the amendment is, sir, now it is exempt. Now it is exempt. That means there is no point of RCM or FCM. So obviously there is no reverse charge mechanism also. So that is the amendment here. So to keep it short, this is the amendment. So whether you have revised this or not, sir, this is the amendment here. Am I clear? So that is what the story. So the exemption has been withdrawn and exemption has been given. Earlier it was under exception. Earlier it was taxable under reverse charge mechanism. Now they said this is also like exempt under GST. So if it is exempt under GST, there is no need to fight whether recipient is liable to pay GST or the supplier. So that respective amendment has happened even in reverse charge mechanism, my dear friends. So that is what the next amendment here. So earlier it was under reverse charge, now removed from RCM, now removed from reverse charge mechanism. Why? Because it is exempt now, because this service is exempt now, because this service enjoys exemption now. So that is what the point. Clear? That is what the amendment. So with this we are done with page number 6 and amendment number 6. So let us move on to the next one. So my dear friends, here the interesting thing is amendment number 7. So amendment number 7 is not an amendment actually. This is addition to your syllabus. To your syllabus, if you remember, reverse charge mechanism, only the services covered under reverse charge mechanism were present in your syllabus. Now they have added even the goods which are subjected to reverse charge mechanism in your syllabus. Okay, so this is technically speaking not an amendment, but this is a case where they have added something extra in your syllabus. So what they have added in your syllabus? They have added in your syllabus what are the goods which are subjected to reverse charge mechanism. A simple one. So I just gave it in a table form so that you understand the things, and I have segregated here what is the type of goods, who is the supplier, who is the recipient. Okay, so that you have to remember for your exam. Very important. Okay, so if you just remember what is what here, that is more than sufficient, my dear friends. So sir, cashew nuts, supplier is an agriculturist, recipient any registered person. Who is liable to pay GST? The recipient is liable to pay GST, that is the registered person. BD wrapper leaves, agriculturist is selling to whom? To any registered person, sir. Who is liable to pay GST? Again the recipient. Same way tobacco leaves, who is selling? The agriculturist. Who is buying? An registered person, any registered person. So who is liable to pay GST? The recipient is liable to pay GST. And these essential oils, now please understand here, in these first 3 cases, the supplier is the same, agriculturist. Here there is a change. Here there is a change. So here, so first of all, we have seen agriculture is selling either cashew nuts or BD wrapper leaves or tobacco leaves. The person who is buying is a registered person under GST, then reverse charge mechanism. The recipient has to pay GST on that, right? Now, next one is, sir, there are some essential oils other than those of citrus fruits. Okay, now what are the essential oils? Sir, the essential oils like peppermint or essential oil of other mints like spearmint oil, watermint oil, horsemint oil, bergamot oil, Don't ask me what are all these oils, please. Okay, so these are being sold by whom? Any unregistered person. Any unregistered person. To whom? To registered person, obviously. So the recipient is liable to pay GST. Recipient is liable to pay GST. That is what the point here. I repeat, sir, some essential oils which these are having some medicinal qualities in them, so which are used for curing various pains, etc., etc. So these oils, when they are sold by any unregistered person, here it is not agriculturist, sold by unregistered person, purchased by registered person, so the recipient is liable to pay GST. That is what the amendment there, sorry, that is what RCM entry there, right? So the same way, next one is what? Silk yarn. You will be seeing, no, like which is used for making the silk sarees, weaving the silk sarees, all the stuff. So that silk yarn, if it is sold by a person who is manufacturing that silk yarn, either from the raw silk or by raw silk cocoons. Okay, so if it is purchased by a registered person, the registered person is liable to pay GST. So who is the supplier here? The manufacturer of that silk yarn. Okay, he is selling, and who is buying? The registered person is buying, and obviously that registered person has to pay GST under reverse charge mechanism. Okay, so that is what the next one. And guys, I repeat, no technicalities, nothing here. You should remember what is the good, who is the supplier, who is the recipient, nothing else. Fine. So now raw cotton sold by agriculturist. So agriculturist is coming for the fourth time to see you. Okay, who is buying? Registered person. Who is liable to pay GST? Registered person. The recipient is liable to pay GST. The same story with respect to lottery. And lottery, if you know goods definition includes actionable claims. Obviously lottery is an actionable claim. So lottery, supply of lottery, who is the supplier? Sir, supplier is the state government is organizing the lottery, or union territory is organizing the lottery, or the local authority is organizing the lottery. Sir, these people are organizing the lottery, and who is buying that? So this lottery distributors are selling agents. That means these people will purchase those lottery tickets, etc., from the state government, and these people will sell. So when they are buying them, obviously who is liable to pay GST here on that transaction? The lottery distributor or selling agent is liable to pay GST there. So I repeat, the lottery transactions, the state government or union territories or local authorities are conducting the lotteries through using what? Lottery distributors or selling agents. So first they sell them to that lottery distributors, and then the lottery distributors will sell to the public, etc., etc. So in such cases, the transaction, sir, sale of lottery tickets is by whom? From government. To whom? To lottery distributor or agent. Who is liable to pay GST? The lottery distributor or selling agent. Fine. So the explanation not relevant for you, don't worry. They have given the explanation what is the meaning of lottery distributor, etc. Okay. Next, coming to the next one. Entry number 6 in this. So the goods here are the used vehicles, seized and confiscated goods, or old and used goods, waste and scrap. You will be seeing, like when you go to any police stations or etc., etc., some even the railway stations are some seized goods, and the vehicles, etc., will be lying, some scrap will be lying, all these things, correct? So those are sold by central government. Those are sold by central government. And the interesting thing here is excluding Ministry of Railways. This is again the amendment within this. Okay, are these are sold by whom? State government, union territory or local authority, to any person registered under GST, to any person registered under GST, then this registered person only liable to pay GST. So mark this entry important. Why? Because see, understand here the difference is, see, for example, sir, there is let us assume some state government is making sale of scrap to a registered person, to a registered person. So whether RCM will come into picture here or not? Yes, RCM will come into picture. But sir, the same thing is provided by Indian Railways. Indian, what is that Indian Railways is doing? Indian Railways is also doing the same thing, sale of scrap. Then whether RCM will come into picture here? No, it is FCM. It is FCM, forward charge. So that is what important here. Please keep in mind, right? So this used vehicles, seized and confiscated goods, old or used goods, waste and scrap, all these things what? Sold by government to any registered person. Obviously, the registered person is liable to pay GST, but this is not in the case of Indian Railways. Indian Railways selling the scrap, old or used vehicles or any other things. So as given above, then to a registered person only, but it is forward charge, it is not reverse charge. So that is the next one. Priority sector lending certificates, we have discussed about these things in supply chapter also. So this priority sector lending certificates, when certain banks have like lended the money more than the required norms, sir, they will just transfer it to some other banks also, so that the other banks will satisfy the criteria of priority sector lending. So priority sector lending certificates are also equally treated as goods sold by one registered person to another registered person, reverse charge mechanism. Okay, so that is what the concept. So this is the new addition in your syllabus. This is not an amendment, this is new addition, and in this new addition this is the only amendment actually happened. So that is why I gave you example also and just explained you. So very important for your exam, can be tested, because this is first time they are adding goods covered under reverse charge mechanism in your syllabus. So please be careful regarding this. Just remember what is what, who is the supplier, who is the recipient, what is the nature of goods. That is more than sufficient, right? So that is what amendment number 7, my dear friends. With this we are done with this chapter also, charge, covering the amendments. So let us move on to the next chapter, that is place of supply. But before going to place of supply, let me just finish quickly exemptions also, because reverse charge mechanism exemptions parallelly we have covered. So let me cover exemptions first. So let us move on to the next chapter, exemptions. Still we have to discuss place of supply chapter amendments. So we'll first discuss exemptions, the amendments related to exemptions, then we'll go with that. And in exemptions, if you see, most of the topics are already covered when we are discussing this reverse charge mechanism. The only entries which are not discussed are this. See, just remember, satellite launch services provided by Indian research organizations, Indian Space Research Organization, sorry, ISRO, Antrix Corporation Limited, New Space India Limited. These are exempt under GST. Hope we have already discussed this in the class, but it is given in statutory update. I am just discussing here. Now, so that is simple one, entry number 19C, exemption. So satellite launch services provided by whom? ISRO, Antrix Corporation Limited and New Space India Limited are exempt under GST. Right. So just remember that. Next, this we have discussed, and entry number 7, all these things, yes, we have discussed. So everywhere next to the postal department, they have added the words Ministry of Railways. So that is done. So I have also given the note here, except for the words added Ministry of Railways, nothing else has been changed in the above entries. So this was the point there, right? So next, new exemptions. If you see, what are the new exemptions? So this is important, please remember it. Even in RTP also, in one question they have given this as an adjustment. If you are providing any person, so services provided to governmental authority, what is the service? Sir, you are providing services to governmental authority by way of any supply of water, public health, sanitation conservancy, solid waste management, or slum improvement and upgradation, all these things, then who is liable to pay GST? Nobody is liable to pay GST. This is exempt under GST. Okay, so here supplier can be any person, supplier can be any person, supplier can be any person. Who is the recipient? Recipient is governmental authority. What is the nature of supply? What are the services we are providing to them? Sir, water supply, sir, public health, sir, sanitation conservancy, solid waste management, slum improvement and upgradation, sir. Then whatever the consideration that governmental authority is paying to you is exempt under GST. Remember this well for your exams, right? So these are the things. And amendments in exemption from GST, we have already discussed this. So one line summary: transportation of goods by vessel from a place outside India up to the customs clearance in India has been exempted now. Important for your exam, just remember it carefully. So we have finished the amendments even related to exemptions chapter for your kind information. So majority of the junk we have finished during RCM discussion only. So let us not worry. Let us come to place of supply. Let us come to place of supply. So place of supply, what are the amendments? So amendment number 8. Before that amendment number 8, I have just given a background there just for your knowledge. You can just go with that. So let me just straight away come to the amendment number 8. So amendment number 8 is one interesting amendment here, which is made in section 10 of IGST Act. If you remember, section 10 of IGST Act is dealing with place of supply for goods, right, which is not import or export. So now the amendment is simple. Sir, they have added a new clause here called clause CA, your qualification in future. So what is this amendment? What is this amendment? Simple. See, normally, see, when you are going for shop, let us assume I am staying in Chennai. I am going to Hyderabad or Bangalore somewhere. So I went to Hyderabad, went to a shop, purchased something, and now coming back. Now, what is the place of supply for the transaction? Now, if the person is registered, all the stuff, fine, we will go with the normal clauses. Clause A, B, C, D, E, all this. But here, they have made an amendment and introduced a new clause saying that if the supply of goods is made to an unregistered person, so supply is made to whom? Very interesting amendment, my dear friends. Supply is made to unregistered person. Unregistered person. Sir, in this case, place of supply shall be address of the unregistered person. Address of the unregistered person. Simple, very simple. So I went to Hyderabad, purchased a mobile and coming. Now, for that mobile which is sold by that particular store person, what is the place of supply? Place of supply is address of this unregistered person. My address is Chennai. So for this particular transaction, even though I went to Telangana, Hyderabad, purchased a mobile there, and I am coming to Chennai, Tamil Nadu, here place of supply is, first remember, only this is applicable only when the recipient is unregistered person. Okay, only when the recipient is unregistered person, this will come into picture. So I went to Hyderabad, I purchased a mobile and coming to Chennai. So for this transaction, what is the place of supply? The place of supply is Chennai. The address of the unregistered person, that is Tamil Nadu. So if the address is not available, so shall be the place of supply shall be the location of the recipient which is recorded in the invoice. No, sir, the location of the recipient is not recorded. Then location of the supplier where that address is not recorded in the invoice. So simple. I gave my address, said Chennai, Tamil Nadu. Then place of supply will be Chennai, Tamil Nadu. I didn't give anything, any address. Hey, why you need my address? Like that, I just told to the supplier and I didn't give my address and I just came. So then location of the supplier itself will be the place of supply. So location of the supplier is Telangana, Hyderabad. That will be the place of supply. Clear? Simple. So supply made to an unregistered person, supply of goods, okay, made to an unregistered person. Place of supply will be address of the recipient recorded in the invoice. Sir, address of the recipient we have not recorded in the invoice, sir. Then location of the supplier will be the place of supply. But sir, clause A, clause C, all these things, they are saying something different, sir, whether the movement of goods is involved, not involved. All that nonsense you don't see, because notwithstanding anything contrary contained in clause A or clause C. So I have a non-obstante clause here. Are you understanding the point? And here one another interesting explanation is nothing but, sir, here address of the recipient recorded in the invoice, That means simple, relax, just recording the name of the state of that recipient is also more than sufficient. That means in Hyderabad, when I purchase the mobile phone, they need not record like, sir, in Chennai, what is your address, what is this, so and so street, so and so area, so and so pin code, all not required. Just if I have told, I am from Tamil Nadu, enough, or if I am from Andhra Pradesh, enough, I am from Karnataka, like that, just recording the name of my state in the invoice also more than sufficient. That is my address. That will be the place of supply. Clear? So that is what this amendment all about, amendment number 8. So mark it important. So there is a new clause introduced in section 10 subsection 1 clause CA, right? Fine. So there is what? The amendment, right? So I have just given the analysis here, the flow chart, simple one. So with this we are done with amendment number 8. So let us move on to amendment number 9. Again, this is related to obviously place of supply. So the next amendment, amendment number 9 is regarding, see there is a new section, my dear friends, section 14A in IGST Act. See, this is all about when a person located outside India is providing online money gaming services, online money gaming services, sorry, online money gaming, supply of online money gaming. So online money gaming is treated as good, you have understood already that one. Supply of online money gaming to a person located in India. So first of all, we have to understand here, this supplier is liable to pay GST. I am just simplifying the amendment for you, whatever is given there in the statutory update. So supplier is liable to pay GST. So when the supplier located in non-taxable territory and recipient is located in taxable territory, normally we have seen reverse charge mechanism scenarios, but in this case reverse charge mechanism is not applicable. So supplier is liable to pay GST on that. Supplier is liable to pay GST on that. What if the supplier doesn't have physical presence in India? Then obviously, just like e-commerce operator, do you remember? So just like that, sir, what happens? His representative who is representing him for any purpose in India is liable to pay GST. Okay, so when the supplier of online money gaming who is not located in taxable territory and the recipient is located in taxable territory, then the supplier is liable to pay IGST on that. So for that he has to obtain a single registration under a simplified registration scheme. So simplified registration scheme is given in section 14 of IGST Act, a simplified registration scheme. So based on that he will take registration and he has to pay GST on that. So now, provided that any person located in taxable territory representing such supplier for any purpose in taxable territory shall get registered and pay IGST on behalf of the supplier. Okay. So supplier of online money gaming from outside India is liable to pay GST on the activities whatever is supplying this online money gaming to a person located in India. So he has to take registration using this simplified registration scheme and do it. So if he is not doing that, at least any person representing that person, that supplier, so in India for any purpose, has to obtain registration and pay IGST on behalf of the supplier, just like e-commerce operator. No sir, the supplier is not having the physical presence as well as he is not having any representative. Then what he has to do? Obviously he shall appoint a person in India, he shall appoint a person in India for the purpose of paying IGST, and such person shall be liable to pay tax. So if you are providing online money gaming from outside India, still we won't catch the recipient, we'll catch only you, the supplier. Supplier can get the registration through simplified registration scheme and get it done, or he can do it through his representative. Sir, I don't have physical presence or I don't have representative in India. No, please appoint a person for this purpose and pay taxes and get lost. And if you are not doing that, then the government has got the power to block your sources. See, for providing online money gaming, you should have some resource through information technology, using the information technology over the internet, all that stuff. So the government has got the power to block all the access for any information generated, transmitted or received or hosted in any computer resource used for supplying this online money gaming activities by the supplier. So in India we can block anything, right? So the government can block your access for any of these things using the computer or using the internet you are providing your activities. No, so all these things can be blocked by the government if you are not following this law. Simple. So what is the summary of this particular amendment number 9? Sir, if you are a supplier of online money gaming from outside India to a person in India, then we will catch you only, you are liable to pay GST, supplier, by taking a registration. No sir, you can also do it through your representative. And if you don't have physical presence or if you don't have any representative, please make sure you are appointing somebody to get registered and pay taxes on behalf of you, right? That is mandatory. Otherwise, what the government will do, the government can block the access to all the sources which you are using, maybe over the internet or over any other systems. Okay, so that access can be blocked by the government. Okay, so there is what amendment number 9, right? So let us move on to next amendment, amendment number 10. So please understand, earlier there was a separate subsection 13 subsection 9 for what? For transporting the goods including through mail and courier, but now that subsection has been removed for various reasons, and let us not worry about that. So because it has been removed now, sir, if you are transporting the goods, this can be tested for your exam, please be careful, important. Sir, if the goods are transported including through mail and courier, what is the place of supply? Place of supply you will determine based on section 13 subsection 2, the general rule. So hope you remember this general rule, section 13 subsection 2. What is the general rule, my dear friends? What is the place of supply as per section 13 subsection 2? So the location of the recipient is available, then the place of supply will be the location of the recipient of service. If the place of supply if the location of the recipient is not available, then the place of supply will be the location of supplier of service. So section 13. So when section 13 will come into picture, place of supply, when either the supplier or the recipient is located outside India, right? So the general rule for that services is nothing but based on whether location of the recipient is available with you or not available. If it is available, then his location only will be taken as place of supply. If not available, location of the supplier will be taken as place of supply. So that is what the point. So this rule is now applicable for what? Even for transportation of goods including mail or courier, when either supplier or recipient, any one person is outside India, right? So that is what the point. So let us move on to the next amendment, amendment number 11. This amendment number 11 is not actually an amendment, but this is a clarification. So let us move on to this. What is this amendment all about? Now guys, this clarification is regarding the place of supply in case of supply of services in advertising sector. Now please understand, first let me give you some small background here. See, first this is regarding, see, there will be various companies doing business. Okay, now what these companies will do, sir, these companies have to do advertisement. Let us assume Santur soap is a product of a company. Now that particular company, if you see, there are so many hoardings, etc., where they are advertising their product Santur soap. Now please understand, whether this company only will approach every person who is having this hoarding, whoever is the owner of that hoarding, going to them, talking with them personally and getting this hoarding, and then they are doing the advertisement. No, that will not happen. Sir, these companies, what they will do, they will have an advertisement agency. They will go to an advertisement agency. So the advertisement agency will provide them the services of advertisement. Correct. For that, the company will pay them consideration. Now coming to the point, sir, these advertising agencies also, what they will do, obviously they will not be having hoardings across the country, all that. Sir, they will be meeting various peoples, and let us assume I am the person who is having some big hoarding in my particular place. Let us assume I have some land which is next to the highway. So just next to the highway, I have some farmland, etc. So I have constructed a big hoarding, and you will be seeing, whenever you are traveling or when you are seeing the hoardings, like for advertisement, contact, like this, the number would have been given. So such type of hoarding I am having. So this advertisement agency is coming to me. So let us assume, let me be called as a vendor here, and they are coming and asking me, sir, we need that hoarding. I am saying, okay, fine, I'll give you that hoarding. For what purpose you want? Sir, we want to advertise the Santur soap brand or some other products, sir. Okay, fine, I will put it up, don't worry. So I am putting whatever the advertisement you want there, I am just putting it there, and you are paying me the rent. That means, can I say this is just like renting the hoarding? Because that hoarding is like purely under my control. That is purely under the control of vendor. You tell me what to be changed, etc., etc., for how many days you want. Sir, you are asking me to put Santur soap advertisement for 30 days. Yes, I will put Santur soap advertisement for 30 days. Pay me 1 lakh rupees and get lost. That means the hoarding, that full structure is under my control. That is vendor's control. And what I am providing to this advertisement agency, I am renting the hoarding. I am renting the hoarding. Sir, when I am renting this hoarding, can I call it as, can I treat it as renting of immovable property? Yes. So place of supply shall be determined based on what? Section 12 subsection 3. Section 12 subsection 3. This is one possibility. But there is another possibility, that is, you are telling, you are asking me, please give that entire hoarding to us. It will be under our control. You lease it to us. Let us assume. Sorry. Extremely sorry, guys. A small correction. So, in this case, what I am doing, sir, imagine, see, you are asking, sir, give the hoarding to us for 1 month or 1 year, 2 years, all that stuff. So, I am renting the hoarding. I am renting the hoarding. So, the hoarding will be fully in your control. That is under the control of advertising agency. Under the control of advertising agency. So, then it will be what? Nothing but, sir, we are renting the hoarding, renting the immovable property. So, this advertising agency will put Santur ad or Rexona ad or Synthol, Lifebuoy, whatever it is, whatever the ads they want to put, they will just put it. So, here as a vendor, I have just rented the hoarding to you. I have rented it as an immovable property. For this transaction, the place of supply we will refer as per section 12 subsection 3. I am extremely sorry, my dear friends, just got confused. Okay, so the point is, I am renting the hoarding for you fully, so it will be under your control, either for 1 month or it may be for 1 year or whatever it is. So it will be fully under your control. So because it is fully under your control, obviously it is renting of immovable property. So you are paying me monthly 1 lakh. So what is the place of supply for this? We will go through section 12 subsection 3, the location of immovable property. No, that is not the case. You tell me which ad you have to, like you want me to place. I am saying, you want Rexona soap ad, I will change Rexona soap ad. Or you want Santur soap, I will change Santur soap. What you want to put Airtel advertisement? Yes, I will put. You pay me per advertisement 10 days this much, 30 days this much. That means the hoarding is fully under the control of the vendor. The hoarding is fully under the control of vendor. Whenever you want to change something, you have to tell me, I will change. I have not given this hoarding to you. I am not given this hoarding on rent for you, or this is not under your control. That means, understand, vendor is advertising Santur soap for the advertising agency. That means it is just similar to the vendor providing advertisement services. The vendor is providing advertisement services. Yes or no, my dear friends? The vendor is providing advertisement services. So for this, in this particular case, you cannot call it as renting of immovable property. You cannot bring section 12 subsection 3 into picture. Are you able to understand? Simple. Vendor is having a hoarding. See, I am the owner of a particular hoarding or whatever. So I have the hoarding. I have given that completely to you under your control. You are a marketing agent, like a advertising agency. Then it is, if it is under your control completely, then it means I have rented out immovable property for you. So place of supply based on 12 subsection 3. No, the hoarding is fully under my control. Which ad you want to display, you tell me, I will change. Pay me this much. That means I am providing advertising services to you. You are providing advertising services to your clients. That is the companies. Clear? So here section 12 subsection 3 will not come into picture. For the place of supply, general rule will come into picture. That is what the clarification given by the department. Hope it is clear. So simple. Vendor, advertising agency's clients. Advertising agency is providing services to the clients, advertising, and advertising agency is going to a vendor and asking for the hoarding. Hoarding, I fully gave it to you. It is under your control. That means I have rented immovable property. No, it is in my control only. I will change the ads, whatever you want, you tell me, you pay me. So if it is fully under your control, place of supply, immovable property, 12 subsection 3. Otherwise, place of supply, general rule, 12 subsection 2. So that is what all about this amendment number 11. So I have clearly given a flow chart regarding that. So you can just go with this. So here we have discussed about advertising company and the vendor agreement, how the agreement is between them, whether the hoardings or the structures or the billboards are under the control of advertising company. If yes, then vendor is renting or granting the usage of immovable property, place of supply is 12 subsection 3. No sir, the hoardings, structures, billboards are under the control of vendor himself and it is his responsibility to display the ads. Then vendor is in fact providing advertising services to the advertising agency by providing visibility. Therefore, such services provided by the vendor to advertising company are purely in nature of advertising services. Place of supply, section 12, subsection 2. Hope it is clear for you all. Right? So that is what amendment number 11, and with this we are done with amendments of chapter place of supply, and of course amendments of chapter exemptions also we have finished already. So let us move on to the next chapter. So friends, coming to the next amendment, amendment number 13, that is from the chapter value of supply. See, if you remember section 15 value of supply, section 15 subsection 5 of CGST Act 2017 provides a power to the government to notify any transaction where they can determine the value of supply as may be prescribed by the government. So simple, government can prescribe a separate valuation mechanism for any transaction whatever it feels so necessary. So simple, for the purpose of online money gaming, online gaming other than online money gaming, and actionable claims in casinos. For these three things, there is online money gaming, online gaming, and actionable claims in casinos. Sir, they have given new rules, rule number 31B and 31C for the valuation purpose. Very simple and interesting thing. Please remember, important for your exam. Simple, sir, if you are going for online gaming or online money gaming, then what is the value of supply for the transactions? For example, simple, let us take online rummy. So to play the game online rummy, I am depositing 1 lakh rupees there. I have paid that 1 lakh rupees. So for playing online rummy, I am putting 1 lakh rupees. That means the value of supply is 1 lakh rupees. On that, I should also pay GST extra. Okay, so when you are playing this online games or online money games, not only the amount what you are investing there as a bet or whatever it is, not only that, but also plus GST you have to deposit there. Okay, so that is what the point. By any chance, after this, like 1 lakh rupees I have deposited into the wallet or anything while playing the game, I have used only 80,000 and they have returned balance 20,000. Now sir, what is the story? Still the GST is on 1 lakh only. So the value is simply nothing but the amount paid or payable or deposited with the supplier, including money or money's worth, even virtual digital assets. That shall be the value, and any amount returned or refunded, including player not using that amount paid or deposited, shall not be deducted. That is the interesting thing. As I told you in the example, simple, I am going to play online rummy, 1 lakh rupees I have deposited in that, and I have used only 80,000 but and returned 20,000 taken back. Still the value of supply here is 1 lakh rupees and GST to be paid on 1 lakh rupees. That means while depositing that 1 lakh itself, I should pay extra GST 28%. That is what the story here. Clear? So this is for online gamings and online money gamings, and that is rule 31B, my dear friends, for your information. And rule 31C also the same thing, almost the same thing. This is for casinos. And if you see, when you go to casinos, there will be so many games people are playing using some coins or chips, etc., tokens, whatever you call. Here they have clearly told the value of supply is whatever the amount you have paid and or payable for buying those tokens or chips or coins or tickets. That will be the value of supply. Let us assume I am going to a casino in Goa, paying 10 lakhs and purchasing some chips. You will be seeing in movies and all that red color, green color, etc. chips and all they will be giving. Okay, not these chips, these chips in the casinos for playing. So I have paid 10 lakh rupees. So the 10 lakh rupees is paid to buy those chips or tokens, all this stuff, coins, then the 10 lakhs is the value of supply. No sir, in these casinos no such chips, tokens, all the system is not there. Straight away you pay the money to play the game, then the 10 lakh rupees. So whatever the money you have paid or payable for buying the tokens or chips, or whatever the money you paid or payable for participating in the games or any event, okay, that will be taken as value of supply. Very simple thing, very simple thing. How much ever you have paid for participating in that any event or game, or how much ever you have paid for buying the tokens or chips, that will be the value of supply. Okay, on that you have to pay GST. So plus GST, that is what the story. And same thing sir, any amount has been returned to you or refunded to you, so because you have not, suppose out of that 10 lakhs chips, finally I was very much disappointed, I have been losing, and I have been investing some 10,000 20,000 at a time, all that stuff, coins, etc. So finally at least 10,000 let me have the money to go back to my home, at least travel expenses I should have, like that I thought. So finally 10,000 worth of coins or tokens I have returned to them. Still the value of supply is what? 10 lakhs only, it is not 9,90,000. So that is what the point. Same story here also, any amount returned or refunded shall not be deductible. Clear? So that is what, simple and simple. What is that? Online gaming, online money gaming or casinos. Sir, whatever the amount you are depositing there for playing in the game or etc., or whatever the amount you are paying there for buying the tokens, chips, all the stuff, that amount itself is value of supply. How much ever if they return tomorrow because of, like, later on when you are not playing or because refunded, etc., that amount will not be deducted. Don't ask deduction there. First, how much ever you deposited, that's all. On that only we'll pay GST. That will be the value of supply. Once given, gone. But the interesting explanation is this. The explanation is all about, suppose if you have received by winning any event or game or scheme, anything, and you are using it again for playing without withdrawing, then it shall not be considered as amount paid or to be deposited. That means initially, for example, I have deposited 1 lakh. So this 1 lakh will be the value of supply. Okay. Now imagine refund 50,000. Still the value of supply is 10 lakh. Sorry, 1 lakh. Still the value of supply is 1 lakh. But the amount whatever is left here in the wallet, sir, it has fetched, I have won rupees 10 lakhs, and this I am using for again playing, used for playing again without withdrawing, just like that the tokens or coins whatever are there with me. So 1 lakh worth coins I have purchased, and now I made them 10 lakh worth coins, and again I am using them for playing. Now again I will not charge GST on that. That means this 10 lakh again is used for playing. No, now this will not be considered as value of supply. Considered as value of supply. That means simple, my dear friends, you are putting back your winnings again without withdrawing. With the excitement or expectation you will win even more. I will not disturb you. Please enjoy. No GST. No GST. Am I clear? So that is what the story here. Right. So this is regarding rule 31B and 31C. So online gaming, online money gaming and casinos. Sir, here whatever the amount you are depositing, whatever the amount you are paying for buying the chips, etc., that amount will be the value of supply. On that you have to pay GST. Suppose in future if something is returned to you or refunded to you because you have not played, etc., then it shall not be deducted. I'm sorry. But if you have won something and you are using the same thing again for playing again, then I will not disturb you. Enjoy. I will not charge GST. Don't worry. So that is what all about that. Amendment number 13 and amendment 13C, there are two things. One is value of supply, the other is time of supply. Here value of supply we have discussed in this amendment, and there is one more thing, time of supply for the specified actionable claims. Sir, what is the time of supply for the specified actionable claims? See, understand, specified actionable claims are also goods. For the goods, what is time of supply? Section 12. In section 12, subsection 2 is a general rule. And time of supply for goods in case of general rule, you know very well, advances received will not be immediately taxed. Time of supply will not be date of receipt of payment, but only for the advances received for services as per section 13 subsection 2, time of supply for services is date of receipt of payment. But for goods, that is not the case. Alright. So for goods, normally the time of supply is actual date of invoice or due date of invoice, whichever is earlier. But sir, they have come up with a different provision for specified actionable claims. For these people, we don't want to give this relaxation. And you know, obviously, when you have attended the lectures, you would have understood the logic for this particular provision. Okay. But for specified actionable claims, time of supply is time of receipt of payment. We will not wait for actual date of invoice or due date of invoice. Please remember this, be careful, important amendment for your exams. So hope it is clear for you. So time of supply for this specified actionable claims, as we discussed above. Sir, what is the time of supply? Time of supply is nothing but date of receipt of payment. What is the receipt of payment? That date of receipt of payment itself will be the time of supply. But for all other goods other than specified actionable claims, the time of supply is actual date of invoice or due date of invoice, whichever is earlier, just like already the old law, the same thing. Only this is what different for you, new one. Clear? So that is the amendment, my dear friends. So with this, we are done with amendment number 13. So let us move on to the next amendment, amendment number 14. So my dear friends, next amendment number 14. Here there are actually two issues in this. So the rule 28 has been amended. So let us see the issues and what is the amendment actually there. So now first issue is really something very interesting, where normally the directors will give corporate guarantee to the companies for the loans provided by the financial institutions to the company. So these people, what they will do, the directors of the companies will give guarantee to the banks and financial institutions for providing some credit facilities to the companies, and without charging any consideration, these people are doing this. That means, imagine I am a director of a company, I am giving a guarantee to the company, say like to take the loan, or already the loan has been borrowed, etc. So for that, to the bank or financial institution, I am just giving guarantee for my company, the credit facility, whatever they have provided to the company. For this, what is the consideration I am getting? I am not getting anything. I am not getting any consideration. And understand, here the doubt was, sir, whether this will attract GST or not. Now I am a director of a company. Sir, I am very much fitting within the meaning of related person. Sir, in that case, this is the activity or transaction I am doing without consideration, and this is supply as per schedule 1, if you remember. So schedule 1 says activities to be treated as supply without consideration. In that one, para 2 is like supplies between related person without consideration is a supply. So in this case, director and the company related persons, and this is supply even though done without consideration. So for this, how do you value it to charge GST, because there is no consideration? And if you remember the valuation rules, in that rule 28 clearly says that value shall be the open market value. Are you able to understand, my dear friends? So director has given guarantee for the company's borrowings without consideration. He is providing this guarantee, and because they are falling within the meaning of related person, so this is a supply, and because this is supply, we should charge GST on that. For that, we should know the value. But here there is no value because there is no consideration. So rule 28 is dealing with this type of transactions. So transaction between related persons. So it is saying the value shall be open market value. But the problem is, what is the meaning of open market value? Some value which is available in the market for the same transactions, correct? Similar transactions. Now that open market value, I have to find out. The problem is, there is no open market value. Why there is no open market value? Because RBI has clear guidelines. RBI has given clear guidelines stating that companies should not pay any amount directly or indirectly to the directors for giving guarantee for the company's borrowings. That means, sir, companies cannot pay the directors the commission or brokerage for the personal guarantee what they are giving, except in exceptional circumstances, except in some exceptional cases. Are you able to understand? So that means directors generally will not get any consideration anywhere in the market. That means there is no open market value available. So the rule 28 has been amended in such a way saying that the director services here to the company does not have any open market value. That means open market value can be taken as 0 and hence no tax is payable. No tax is payable. So something very, very, very interesting and important for you. Okay. But sir, however, in some exceptional cases, they will be paying the remuneration. Then whatever is payable to the director, directly or indirectly, then that shall be the value. See, generally you should not pay anything. In exceptional cases, if you are paying, whatever you are paying, that will be the value of supply. Simple. So I repeat, director giving guarantee to the company for the borrowings, for the credit facility the banks or financial institutions are giving to the company. For that, what is the value of supply? Sir, open market value, but open market value is not available. So because RBI said you should not pay anything to the director for giving all these things, so no open market value, that means open market value is 0, that means no tax is payable. No tax is payable. But in exceptional cases, yes, we are paying exceptional cases, so whatever you are paying, that will be the value of supply, right? So there is issue 1 here. Now there is one more issue. Hope you are clear with the first one. Now there is another issue. What is this another issue? So the second issue in this amendment is, my dear friends, sir, we have seen a person, individual director giving guarantee. But here, if the guarantee is given by one company to other company which are related, or a holding company to its subsidiary, obviously which are related, then in such case also, if it is with consideration, it is supply, and if it is without consideration also, it is supply. Guys, understand, we are talking about somebody giving guarantee to a company for its borrowings. If it is a director, obviously we have discussed this scenario. What is the value of supply? What is the treatment? Value of supply is 0 and no GST payable. Second, if it is provided by one company to another company or by holding company to subsidiary company, with consideration, obviously it is supply. Yes, you take it that way. Without consideration also, it is supply because they are related persons. And same story, section 7 subsection 1 clause C read along with schedule 1, to be treated as supply even without consideration. In that cases, it is clearly said that the taxable value will be, see, this is something interesting, whether you are eligible for full ITC or not. Because if you remember, sir, if you are eligible for full ITC, whatever is declared in the invoice, that it shall be taken as open market value, and that itself will be taken as value of supply. If you remember rule 28. But here they have inserted a new sub rule saying that, sir, value shall be in such cases 1% of the amount of such guarantee offered or actual consideration. So suppose if you are offered guarantee for 100 crores, sir, it is 1 crore, or how much you are charging for this? You are charging for this, let us assume some 20 lakhs, if at all you are charging consideration, whichever is higher. No, sir, I am not charging any consideration. Then in this case, it is not 20 lakhs, it will be 0. So 1 crore or 0, whichever is higher, obviously 1 crore. So that will be the value of supply. But this is not applicable. Please understand, this is very, very important for you. But this is not applicable for what? This sub rule is not applicable for first scenario where we discussed about director giving guarantee. This is only company is giving guarantee to another company, or a holding company is providing guarantee to the subsidiary company. Then only the value of supply will be 1% of the guaranteed amount or actual consideration, whichever is higher. So that is what the concept. Hope you are clear with this, right? So some interesting and important amendment, please remember, right? So let us move on to the next amendment, guys. Amendment number 15. So let us move on to the next amendment. So the next amendment, if you see, this is again a clarification, actually not an amendment. So this is all about head office providing the services to branch office. And you know, head office providing services to branch office, imagine SHAH Classes, Mumbai head office is providing services to branch office Chennai. Sir, there is a transaction between distinct persons and it is supply, and they have to raise invoice and pay GST on that. Now the doubt here is, sir, the head office, whether it is mandatory for them to raise invoice to the branch office under section 31 for internally generated services. And another thing is cost of all components including salary cost of the head office employees also should be included in that, or what? That was a doubt. So I repeat, head office is providing some services to the branch office, and sir, whether we have to raise the invoice, and in the invoice whether we have to include all the cost components including the salary paid to the employees of the organization. So salary paid to the employees of the organization for providing something to the own organization. So this was a doubt, and the department has clarified it with a simple clarification saying that, see, I have simplified this for you, this flow chart. So you know, obviously, sir, for the transaction between RPs and DPs, the related person and distinct persons, sir, rule 28 says that value of supply shall be open market value, and if the recipient is eligible for ITC, whatever you have disclosed in the invoice, that will be taken as open market value. So what is the problem for you? Head office is giving the invoice for branch office for the internally generated activities, supplies. Invoice we are showing 100 rupees. 100 rupees will be taken as value of supply because the recipient is eligible for ITC. Correct? So that is one point. And suppose if the head office has not issued a tax invoice to the branch office also, then see, this is one super duper relaxation. The value of such services may be deemed to be declared as nil, and the nil itself will be taken as open market value. That means even though you have not issued an invoice, we are fine. We'll assume that the open market value is nil for that. Okay, when recipient is eligible for full ITC. No sir, that is the branch office is not eligible for ITC, or ITC is not available for the branch office, then raise the invoice, right? But the cost of salary of employees of the head office need not be included in the value of supply. Okay, so that is what the point. Simple. See, head office is providing services to branch office. If the branch office is also like what, recipient eligible for ITC, whatever this head office is giving the invoice, that itself will be the value of supply because of rule 28. But sir, if at all head office is not giving the invoice itself to the branch office, then we'll assume open market value is nil, and that is how you close the transaction. No need to do anything, just eat 5 star, do nothing. Okay, suppose ITC is not available to the branch office, then please raise the invoice. Okay, but include all the cost. It is not mandatory that your own organization employees cost also you have to include in that. It is not like that. It is not mandatory. So that is one relaxation, one clarification given by the department. So with this, we are done with amendment number 15 and amendments with respect to value of supply chapter as well. All right. So next, input tax credit, amendment number 16. The amendment number 16 and 17 are related to this rule 42-43, if you remember. Okay, so regarding this apportionment of credit, common inputs and common input services, capital goods, etc. So here simple, actually, if you remember, there when we are calculating the apportionment of credit, how much you can avail, how much you have to reverse, all that stuff, in rule 42 and 43, we are discussing something related to exempt supplies. Value of exempt supplies will be calculating. I'll just show you in our material where we have discussed. If you remember, sir, we'll be taking this value of exempt supplies when you're calculating. So when you're calculating that value of exempt supplies, second. In our material, page number 8.18. So if you see here, for the purpose of calculating the credit attributable to exempt supplies, we have seen some inclusions and exclusions in exempt supplies. And in the exclusions of exempt supplies, already we have discussed in our class. See, earlier, transportation of goods by a vessel from custom station in India to a place outside India. Okay, that means from India to a place outside India, you are transporting the goods by vessel. Those services were earlier exempt, but now it has been made taxable. I am not talking about, see, transporting the goods by vessel from outside India to India is exempt. Recent, like we have seen already the amendment. We are talking about transportation of goods by vessel from India to outside India. That is taxable. Earlier this was exempt. So there was a clarification, even though it is exempt supply, don't add this in exempt supplies value. Don't use this turnover. for computing the ITC related to exclusively exempt supplies in calculating this rule 42, 43 and all. So like that they gave the explanation. But now because it is being taxable, however, you need not add this in value of exempt supplies. So this we have already discussed in the classroom. So this is what the amendment number 16 or 17, whatever it is, like we are discussing. Okay. So 16. So that is amendment number 16. Nothing to worry, we have already discussed in the class. If anybody watching the amendment lecture who are not my students, no issues. This is nothing but earlier for rule 42, 43 calculations, when you are calculating ITC attributable to exempt supplies. So in value of exempt supplies, you need not add this value of transporting the goods by vessel from India to outside India, because it is however taxable. So earlier they said it is exempt supply, but don't take it for exempt supplies. Now it is not an exempt supply, so obviously we will not take it for exempt supplies. So this clarification has become now redundant. That is what the point there. Okay, so that is amendment number 16. Amendment number 17 is again regarding the same value of exempt supplies. When you are calculating the value of exempt supplies for the purpose of rule 42, 43, you will consider RCM supplies, if you remember, transaction securities, sale of land and building except paragraph 5b of schedule 2, and also you will consider supply of warehoused goods before clearance for home consumption. That means, if you remember, these are schedule 3 activities. Sir, these two are. These will be added in the value of exempt supplies while calculating the ITC attributable to exempt supplies. Okay, for the purpose of rule 40 to 43. Now, for this purpose, for example, I have stored the goods in a warehouse without clearing for home consumption. Before that, what I am doing? Before that itself, that means before clearing for home consumption itself, I made a supply. Sale of warehouse goods before clearance for home consumption. It is not a supply as per schedule 3. So this transaction I should add for value of exempt supplies. But what should be the value? That is the clarification here. What should be the value? They are saying that the department is saying here, don't take the value of the goods for how much you have sold it actually, but take the value of these goods which are sold in duty free shops. The same goods, when they are sold in duty free shops, at arrival terminal to the incoming passengers. Incoming passengers. What is the value this duty free shops will charge? The same thing we will take it as value. Am I clear, ma? So duty free shops, at duty free shops, what is that goods they are sold? What is that value? That value you consider. You don't take the value which you have received from your customer recipient. So that is what the clarification. So simple things. For the purpose of calculating value of exempt supplies, we are seeing these two amendments. One is nothing but already old one, so we have already discussed in the class, and it is nothing but earlier that was exempt supply, but they were saying don't take it as exempt supply. Now it is taxable supply, so however we will not take it in value of exempt supplies. Here, while calculating the value of exempt supplies, they are saying supply of warehouse goods before clearance for home consumption, consider it as exempt supply, but the value should be how much ever the value they are charging at duty free shops to sell the same thing at arrival terminals. That means when somebody is coming to India, not departure, it is arrival. At arrival terminal, for how much we are selling, that price you take as value. That is what amendment number 17. Simple amendments. Okay, now let us move on to the amendment number 18. Again, amendment 18 is simply a clarification. So what is this all about now? See, simple. We have discussed input service distributor concept. Hope you remember. In input service distributor concept, what is happening? Sir, there is a head office. There are branches or branch offices located in multiple locations. They are also doing business registered independently. And there is a centrally located head office which is just taking the billings, that is getting the invoices, getting the services, but they are not doing any output service. So the credit is getting accumulated. So what we are doing, we are spreading the credit, passing the credit. For that purpose, we are registering as an input service distributor. Now the doubt here is, when one head office and branch office are there, and head office is receiving common input services, head office is receiving common input services from a third party, but that is attributable to both head office as well as branch office, or it is exclusively related to one or more branch offices. Now the doubt is, sir, Here, should I get input service distributor registration and then only pass on the credit to my branches, or just like that if I issue invoice is also sufficient as per section 31? Like that they got the doubt. Now the department is clarifying. See, ISD input service distributor option is given for you for a different reason. That means in one place the billing is done, but there are no supplies made, output tax is not there. So if you want to distribute the credit among your branches, then you register. But here I am also doing business, I am also making supplies, they are also doing business, they are also making supplies, already I am registered, all that stuff. Now if I receive some input services which are common for head office and branch office, or for other branch offices itself, when I receive the invoice, the law says you follow ISD mechanism, or what you can do, you can just issue the invoice under section 31. Anything, whatever is convenient for you, that you do. There is no compulsion that you should take input service distributor registration itself and proceed. If you want to do that, you can do that. But if you are distributing it as ISD, then definitely you should take a different registration as ISD that you are aware of. Clear? So again, a simple clarification, right? So that is what simple input tax credit, no major amendments, nothing. So no need to worry, right? So let us move on to the next chapter, registration. And here in the registration, this amendment is not 11, my dear friends, I'm sorry, it is 19, amendment number 19. Okay, so again, simple amendments here in this chapter, also not that greatly like what complicated things. So simple amendment 19, simple one. First, this is what nothing but, so normally when a person is making online money gaming, and you know they have amended the schedule 3 in such a way, they are also called as supply, and they are supposed to pay GST. So any person who is supplying this online money gaming from a place outside India to a person located in India, they have to definitely go for registration, they have to obtain registration. So if anybody providing, let us assume there is some, you are a company who is providing online rummy or etc etc games from outside India to a person in India, supplier, you should pay GST on that. There is no reverse charge mechanism here, you should pay GST on that. So you should apply for registration in India. So that we have already discussed also, right, in the previous chapters amendments also. There is simplified registration mechanism, all that stuff, hope you remember that. Next, so here we have discussed, if you remember, in value of supply amendments. So near rule 31b 31c we have discussed that. Okay, right. So now coming to the next one, next amendment. So the next amendment, amendment number 20. So what is this amendment number 20? The amendment number 20 is simple, nothing but, see, if you remember, like in registration, if any person is not doing other authentication, or if the not opting other authentication, or other authentication fails, or the proper officer feels that physical verification has to be carried out, or the system has selected your application for biometric other authentication, so physical verification is to be done. So in these cases, the proper officer will come for physical verification of the premises, or if you are already registered also, the proper officer can come for physical verification of the premises. So the simple point here is, earlier for the physical verification of your business premises, the registered person or the applicant should be present. That means it should be done in your presence. But now what has happened? Now the rule 25 has been amended in such a way, the physical verification shall be carried out even without the presence of, that means there is no need for the presence of the registered person or the applicant. So that is what the simple point. So simple here, physical verification is going on of the business when after the grant of registration. So this can be done, when this can be done, and verification report will be given by the proper officer within 15 working days, 15 working days from the date of the verification. This is, you have obtained the registration, after that physical verification is happening later on that time. So the proper officer can come and do the physical verification of the place of principal place of business, and he will frame the report and give it to the department, but he should do that within 15 working days. Simple. Sir, if the physical verification is happening before the grant of registration, then proper officer shall get such verification done, even without the presence of the applicant. But what he has to do, he has to submit the report at least 5 working days prior to the completion of the time period. If you remember, the time period for granting the registration certificate is 30 days if the other authentication is not done or if any physical verification has to be done. So in such cases, before the deadline of the 30 days, at least 5 days prior, the proper officer has to give his report to the higher officials, so that they will process the application and grant the registration or reject the application or give the show cause notice. Those things can be taken care. So that is what the point. Simple point. Amendment here is nothing but physical verification by the proper officer need not be done in the presence of the applicant or need not be done in the presence of registered person. Okay, so that is what the story all about. So that is amendment number 20. Now amendment number 21. So what is amendment number 21 here? Again, this is nothing but already the existing rule, but they have just amended it. So rule 10A, if you remember, rule 10A is nothing but updating your bank account details in the common portal. So now they are trying to make it even more stringent actually. So what they are asking here now, when you get your registration, earlier also they were asking you to update your bank account details. Now they have changed the limits. They are saying that within 30 days now, within 30 days from date of grant of registration or before furnishing your GSTR1 or IFF, whichever is earlier. So 30 days from the date of grant of registration or before filing your GSTR1 or IFF, whichever is earlier, what you have to do? You have to update your bank account details in the common portal electronically. So that is what the amendment here. So that is amended rule 10A. This has to be followed by every registered person except those who have applied for registration to follow or to comply with section 52 and 51 and 52. Except them, everybody has to follow this after obtaining the registration. And there is a interesting amendment in rule 21A also. That is, if you are not following this rule 10A, that means you are not updating your bank account details in the common portal within the prescribed time limit as we have discussed above. The department has the authority to suspend your registration also. So they will suspend your registration and will give you notice of cancellation of your registration because you have not updated your bank account details. So then later on what you should do, you should go and beg the proper officer, sir, yes, I am updating my bank account details. So what you have to do, you should update your bank account details. The interesting thing is, the moment you update your bank account details, the suspension will be revoked. But when you should update your bank account details? Before cancellation of your registration. That means after suspension, before cancellation order, you should update your bank account details. So automatically suspension order shall be revoked. The suspension order shall be revoked. Okay. So registration shall be cancelled in case of failure to furnish the bank account. Okay. And the registration shall be deemed to be revoked when you comply with the rule of 10A. Okay. If registration has not been already cancelled. If registration is already cancelled and you update the bank account details, sorry, no use. You should go for asking revocation of cancellation. Okay. So next amendment number 22 is regarding time limit for asking that revocation of cancellation. So now the point is, see, whenever you're asking for revocation of cancellation, if you remember, the time limit for applying for revocation of cancellation was 30 days from the date of order of cancellation, and that can be condoned by ACR JC by another 30 days. That can again be condoned by commissioner for another 30 days. So that was the limit earlier. But now they have amended the law in such a way where they are increasing the time limit for applying your revocation of cancellation, so that you can do within 90 days. Within 90 days from the date of service of order of cancellation of registration, within a period of 90 days from the date of service of order of cancellation, you can apply for revocation. But understand, for applying for revocation, the interesting thing is you should have complied with rule 10B. What is that rule 10B? You should have done your Aadhaar authentication. You should have done your, not Allu Arjun symbol, okay, Aadhaar authentication, double A. So you should have done your Aadhaar authentication, then only you can apply for this. Okay. And this 90 days time period can again be condoned for a period not exceeding 180 days. By whom? By commissioner or any other authorized officer. But authorized officer cannot be less than the rank of additional commissioner or joint commissioner. So please remember, revocation of cancellation can be applied within 90 days from the date of order of cancellation, and it can be condoned for another 180 days. So that is the story here, right? So that is amendment number 22. Earlier it was 30 days plus 30 days plus 30 days, but now it has got changed. Now it is 90 days plus 180 days. We can say that way. It is 90 days plus 180 days now, right? So that is what the amendment number 22. Right. So let us move on to the next one. Amendment number 23, simple one. So they are saying there is a simplified registration scheme for people supplying OIDR services from outside India to non-taxable online recipient, okay, in India. The same thing is also applicable to the person supplying online money gaming. Okay, so simple one, don't worry, we have discussed already regarding that. Next, amendment number 24. So this is something interesting again. So what is that? Supply of goods through e-commerce operator without registration. If you remember, when we are discussing section 24 compulsory registration, in section 24, section 24 will say if you are supplying the goods through e-commerce operator, you should definitely go for GST registration. But if you are supplying services through e-commerce operator, still you can enjoy the threshold limit relaxation. The same thing now it has been applied even for goods also. That means now if you supply goods also through e-commerce operator, still you can enjoy the threshold limit registration. But the only thing is you have to follow certain procedure here, you have to follow certain conditions here. So now even though I am not registered under GST, I can go and sell my goods in Amazon, but what I should do, I should not make any interstate supply of goods. Earlier that was the reason why they were not allowing you to supply through e-commerce operator without registration. Now what they did, they have liberalized the point here, and they said, okay, you sell the goods through e-commerce operator without registration, but at least follow this procedure or conditions. What are those? Number one, the primary condition is don't make interstate supplies, please. Next, what you have to do, you should not do this in more than one state or union territory, and you will be having a PAN card issued under Income Tax Act, and with that PAN you should enroll with, you should enroll. Sorry guys, everything here is given as 1111. So the conditions, so just ignore the numberings here. Two, four, 5, 7. So you should have a PAN, and before making any supply through this e-commerce operator, what you have to do, you should declare these things in common portal: your PAN, your address, the state in which you want to make supplies. So what the common portal will do, that will validate your PAN and that will grant you enrollment number. This enrollment number, you cannot have more than one. Okay, you cannot hold multiple enrollment numbers, and the e-commerce operators should allow you to supply the goods through that e-commerce operator only after submission of this enrollment number. And tomorrow anytime when you are making the supplies, your aggregate turnover exceeds the threshold limit of 10 lakh, 20 lakh, 40 lakh, whatever as the case may be, then you can apply for registration. The moment you apply for registration, this enrollment number validity will cease from the date of your registration. Simple amendment, nothing but we are allowing even the people dealing with goods also to sell goods through e-commerce operator without registration, but follow a procedure. Simple. So that is amendment number 24 for you, right? So e-commerce operator also has some procedure to follow. What is that procedure? This is number 1, 3, 4. What is that procedure? Nothing but, sir, e-commerce operator shall allow the supply of goods by said person only if the enrollment number is there. Yes, we have already discussed that. E-commerce operator shall not allow the person to make interstate supply. Yes, we have already discussed that also. E-commerce operator shall not collect tax or source under section 52 for the supplies made by such person. So e-commerce operator, this is interesting, or this is the new point for us, that is, should not follow section 52 here. He should not collect tax or source. TCS will not apply here because the recipient is unregistered. Okay, next, This is another interesting point. This is another interesting point. What is that now? E-commerce operator shall furnish the details of supply of goods made through it by the said person in form GSTR 8. E-commerce operator should give the details of what and all you people made the supplies through e-commerce operator, because you are not registered. No, all the supplies made by you should be given by e-commerce operator in form GSTR 8. So you are increasing the workload for the e-commerce operator. He will increase his fees also for you. Okay, so that is the point. Okay, so that is fine, one thing. And I repeat, in amendment 24 I am just discussing all the amendments which are related to this e-commerce operator only. And here finally they got one more doubt also, that is, hope you are clear till now. So we have discussed what you have to do, what e-commerce operator has to do. Now here we are going to discuss something called where multiple e-commerce operators are involved in one single transaction. Okay, in that case, what do you mean by e-commerce operator? Okay, for the said supply made by the said person through him. For example, Mr. Vishnu is making some supply through some e-commerce operator. Let us assume e-commerce operator 1. This fellow is again listed in another e-commerce operator, and the supply is made through this e-commerce. So now for the purpose of e-commerce operator, meaning, what do you mean by that? Now, sir, in this case for Vishnu, who is the e-commerce operator? For Vishnu, the e-commerce operator is the person who finally releases the payment to said person. For me, the payment is released by this fellow. Now this fellow is called e-commerce operator for me. No, for me the payment is released by this fellow. Now then this fellow is called e-commerce operator for me. Okay, for that said transaction. So who finally releases payment to the said supplier, that person will be called as e-commerce operator. And the special procedure to be followed by e-commerce operator made through it by composition, this is different, sorry. So that is what the meaning. So in case of multiple e-commerce operators are involved in any transaction, sir, who is the e-commerce operator for this supplier? Whoever is releasing payment to that said person is called the e-commerce operator. That fellow has to follow this particular procedure. Okay, right. So now the point is, there is another special procedure for the e-commerce operator for the people supplying the goods through it who are opting composition scheme. For example, I am selling the goods through Amazon and I have opted composition scheme. In that case, what is the responsibility? What is the procedure the Amazon has to do? Amazon has to do, see, earlier composition suppliers were not permitted to make any supply of goods or services through e-commerce operator. Okay, who is required to collect? TCS. Now, of course, e-commerce operator are supposed to follow section 52 TCS provisions, you know that. Now, here, what is the provision? The section 10 has been amended in such a way where it is permitting the composition dealers to make supply of goods through e-commerce operator. Now, we are allowing even who are not registered only to supply through e-commerce operator. So, obviously, this also we have liberalized. Okay. But this is something interesting. You should remember. Sir, if you are composition dealer dealing with goods, you can supply the goods through e-commerce operator. But if you are a composition dealer dealing with services, you cannot supply your services through e-commerce operator. So supply of services by composition suppliers through e-commerce operator is not permitted. Okay, sir, fine. That means if I am dealing with goods, composition dealer, yes, you can use e-commerce operator. But if I am a person dealing with services under composition scheme, I cannot use e-commerce operator services. Okay, fine. But what is the procedure that e-commerce operator has to follow? Now, this is also almost the same thing. They shall not allow the interstate supply of goods, shall collect TCS and pay to the government. This is different point. If you see, for unregistered people, you are not collecting TCS. But for these people, because they are registered, you will collect TCS and that will be reflected in the e-cash ledger. Simple. And the e-commerce operator shall furnish the details in GSTR 8. So same conditions except the second one, remaining everything is same. Already seen points. Simple one. So hope you are clear with this. So this is another amendment. So with this we are done with registration chapter. So amendments of registration chapter are done, my dear friends. Let us move on to the next one. So here the small amendments here. So nothing but amendment number 25 is the e-invoice limit has been reduced to 5 crores. Hope you know that, we have discussed in the class also. Next amendment, this is something interesting which may confuse you. Please understand. See, e-invoicing provisions are exempt to government departments or establishments and government agencies, local authorities, PSUs. Here this amendment is telling us, or this is giving us a clarity. Please understand, if you are a government department or an establishment or a governmental agency or a local authority or a PSU, you make any supplies, no need to follow e-invoice provisions. But the point is, any registered person making supply to you, any person, registered person, for example, I am providing some services to or some goods to government departments or government establishments or governmental agencies or local authorities. Okay, and you people got registered under GST purely for following TDS provisions under section 51, but still I will treat you as a registered person only. Still, me providing the transaction to you is treated as B2B supply only. So I have to raise e-invoice on you. I have to raise e-invoice on you. That means, please understand here, it is not this government department is making the supply. So please understand, if the government department is making the, sir, what is this government department registered for the purpose of what? For section 51 purpose. They make any supply, e-invoice is not required. But any person, let us assume Mr. Vishnu is making the supply. Mr. Vishnu is making the supply. Sir, Vishnu is registered under GST and his aggregate turnover in preceding financial year is greater than rupees 5 crores. Then Vishnu has to follow e-invoice concept. Yes or no? Vishnu has to follow e-invoice concept. So here this transaction is treated as very much B2B transaction, very much B2B transaction, and hence Vishnu has to raise e-invoice to this government department. So this is what the concept we have discussed here. Please don't misunderstand. Please don't misunderstand. Clear? So government department providing any supply or government department making any supply, all that stuff, in such cases invoice is not relevant. But they are receiving anything, and I am also a person who is registered under GST exceeding 5 crore turnover. Now if I am making any supply to them, I will treat it as if it is a B2B supply, and I will raise the invoice. I have to raise the invoice. That is what the law says, right? So that is interesting, so please be careful there. Next, another amendment, a simple amendment. Another amendment is nothing but here, again a very simple amendment. If you are making online money gaming activities, or if you are providing any supplies provided by or through e-commerce operator, or supply of OIDR services to 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 unregistered person, so supply of online money gaming or any supplies made by or through e-commerce operator, or supply of OIDR services to any person who is unregistered, in that invoice also please collect the name of the state of the recipient and give that in the invoice, mention it in the tax invoice, irrespective of the value. That is very important, irrespective of the value of such a supply. If you remember contents of invoice, okay, if you remember rule 46, so in that you will be seeing address of the recipient, the address of the recipient when the recipient is registered. But here if this is the case, these are the supplies, recipient is unregistered, still what you have to do, you have to mention his state name in the invoice irrespective of the value, and that shall be deemed to be the address of the recipient recorded in the invoice. State name is enough, nothing else required. What is your street name, what is your pin code name, all this pin code number, sorry, all these things not required, right? So that is what the point here, simple amendment again. So with this we are done with this, even this chapter also, tax invoice, credit note and debit note. So amendment number 27 is also done. So now let us move on to the next amendment, payment of tax. Amendment number 28. So what is this amendment? Amendment number 28 is all about simple, my dear friends. Here the doubt is, see, This is regarding wrongly availed ITC and utilized ITC. On that we will be paying interest. If you remember section 50 subsection 3, under section 50 subsection 3 we will be paying interest on wrongly availed ITC and utilized. So wrongly availed ITC you will reverse, but you will reverse it and you will pay interest also if it is utilized. So wrongly availed ITC we have to reverse, but if you have utilized it you should also pay interest, okay, when you are repaying it. Now imagine, and this is clarification only regarding IGST wrongly availed and utilized. Wrongly availed rupees 10,000. When can you say this is utilized? When can you say this utilized? You remember that, see, we can say this utilized when closing balance of e-credit ledger falls below this 10,000 only, we can say it is utilized. Correct? Now closing e-credit ledger balance is rupees 9,000. That means I can say wrongly availed ITC is 10,000. Closing e-credit ledger balance is 9,000. So 1,000 rupees has been utilized. That way we can identify. The doubt here was when I am checking wrongly availed ITC and utilized, that is closing e-credit ledger balance, should I see closing e-credit ledger balance of IGST, CGST, SGST separately or together? That means understand, wrongly 10,000 I have been like availed as ITC, wrongly. Closing e-credit ledger balance 7,000, 4,000, 2,000. So now I have wrongly availed IGST 10,000. IGST closing balance is 7,000. That means it is falling below 10,000. Can you say that I have utilized this? Or should I check full e-credit ledger closing balance? Was the doubt. Department gave a clarity that you should see full e-credit ledger closing balance. So 7,000 plus 4,000 plus 2,000, 13,000 is the e-credit ledger balance. You have wrongly availed ITC only 10,000. So 13,000 is the closing balance. When you are reversing the 10,000 rupees wrongly availed ITC, you need not pay interest. You need not pay interest. Suppose if it is 7,000, 1,000 and 500, that means it is total 8,500. Now you can say you have wrongly availed 10,000 ITC, closing e-credit ledger balance 8,500. So 1,500 has been utilized. So next time when you are repaying the 10,000, you should also repay interest on 1,500 under section 50 subsection 3. Hope we have discussed in the class also regarding the interest calculation. This is only some clarity or clarification we are discussing about. Am I clear? So hope it is clear for you all. So that is what the query and the point. And subsequently they have also asked one more query here, sir, for wrongly availed and utilized IGST, CGST, SGST. I repeat, this query is regarding only wrongly availed IGST, not anything else. For that only this provision, not for remaining things. For CGST, SGST, it is you have to check CGST and SGST respective balances only. Okay. So now the point is, sir, for wrongly availed and utilized IGST, CGST, SGST calculations, can I consider the balance lying in GST compensation cess credit in ITC balance or e-credit ledger balance? Can I take this compensation cess balance available? Then the department has clarified, no, you cannot take that because compensation cess credit can be used only to set off with compensation cess credit. So you cannot do that. So ITC in respect of compensation cess can be utilized only towards payment of compensation cess. So because of that, credit of compensation cess available in e-credit ledger cannot be taken into account while considering the balance of e-credit ledger for the purpose of calculation of interest. So you cannot take compensation cess credit balance for seeing whether wrongly availed ITC has been utilized and the shortfall for calculating the. So please ignore that fellow. Okay. So that is what the concept, right? So that is what regarding payment of tax amendments. So with this we are done with amendment number 28. Okay. So let us move on to the next chapter, returns, GST returns. Again, the another amendment here is amendment number 29. Simple amendments but interesting amendments here. So what is this all about now? If you remember in registration chapter when we are discussing the amendments, there was an amendment in bank account updation, that is rule 10A, correct? So here the same continuation we are seeing. So now they have brought in new clauses, clause E and clause F in rule 59. This is regarding blocking your GSTR1 or IFF filing. If you remember, so GSTR1 or IFF can be blocked because of various reasons. Okay, so now they have added two more reasons for this. That is, number one, you are not you have availed excess ITC, okay, than whatever is available in your 2B, and that has been informed under rule 88D to you, that we will discuss in some time. So rule 88D, and you have not replied or you have not paid the amount. What, first, one second, let me just discuss this rule 88D for you. First of all, if you remember, so first let me discuss rule 88D first. So simple, if you remember, rule 88A is regarding the order of utilization of ITC balance, the rules regarding how do you utilize ITC, IGST first for IGST, ITC balance make zero, that concept. Rule 88B is calculation of this interest, okay, read along with section 50 subsection 3. Rule 88C and 88D, nothing but see, rule 88C says you are filing your GSTR1 and your GSTR3B, but there is difference. You are showing 100 lakh sales in GSTR1 and showing 18 lakhs liability. In GSTR3B, you are showing only 10 lakh sales and 1,80,000 as GST liability. So there is a difference between your GSTR1 and 3B liability. So the department first will give you notice, ask you to make the payment. Hope you, if you remember, this has been already discussed in the syllabus. Okay, so the same thing here also it is applicable. But rule 88D, what is it? Rule 88D is all about GSTR 2B and 3B. In GSTR 2B, you have ITC of 10,000. In 3B, you have taken ITC of 12,000. That means there is a difference in ITC, availing ITC. Okay, so same like 88C only. First, the notice will be given to you. Pay back this difference amount. What is that? 2,000 rupees. You pay it, no problem. Or you have any reasons or justification for this, give the explanation. Okay, so now if you are not making the payment, or listen carefully, you are not making the payment, or you are not replying to the department, or you have replied and that was not satisfactory, in such cases they will recover the amount as per section 73 and 74. Okay, and if that is the case, the another interesting thing is your return filing will be blocked. Okay, so you have not reversed the excess ITC as per rule 88D, or you have furnished a reply explaining the reasons, or you have failed to furnish the reasons. Has not furnished the reply. Okay, so then your return filing shall be blocked. Hope you have understood. So either you should give the reply or you should make the payment. So you have not given the reply or you have not made the payment, GSTR1 or IFF filing will be blocked. Not only that, sir, rule 10A, if you are not updating your bank account details also, then your GSTR1 filing, IFF filing will be blocked. So these are the two reasons. Please make sure you remember these things. Okay, fine. So that is what amendment number 29. Hope you are clear with that. We have discussed amendment number 31 also and 29 also. Just there is a procedure here, so they will give you an intimation and highlighting the differences. So your ITC availed in 3B is exceeding ITC available in 2B. So the registered person will be intimated with the differences and highlighting the reasons. Differences will be highlighted. So all these things. So what you have to do there? You either pay the excess ITC, okay, or explain the reasons. Okay, so either you are paying that excess, you have to do what? Within 7 days. So, or furnishing the reply. Okay, and the said difference will be recoverable if you are failing to pay, or you have not given any explanation, or your explanation is not found acceptable by the proper officer. In that cases, they will start recovering it under section 73 or 74. Hope you remember still that section 73 and 74. Okay, so those things we have discussed. So here they are saying that if you are not replying or not making the payment, your GSTR1 or IFF filing will be blocked, and if you are not updating your bank account details as per rule 10A, then also your GST register or GSTR1 filing and IFF shall be blocked. So that is what amendment number 29 and 31. Finally, a small amendment here in this particular chapter, that is amendment number 30. This is nothing but every registered person who is providing online money gaming from outside India to a person in India, this is the new rule, or providing OIDR services from place outside India. So this was already there. This was already there. Sir, earlier what was there na? Person making OIDR services shall file GSTR 5A on or before 20th day of the month succeeding the calendar month. Okay, now what they did, they have made this addition and this addition. So what is that? If you are supplying online money gaming from place outside India to a person in India, then you also should follow this. Or you are providing OIDR services from a place outside India to a non-taxable online recipient, or to a registered person other than non-taxable online recipient. Okay, in both the cases you have to file GSTR 5A. Simple ma, nothing but you are providing online money gaming or OIDR services from a place outside India to a person in India, to a person in India. Simple, remember that way. You have to file GSTR 5A on or before 20th. So that is what the concept, right? So that is what amendment number 30. Hope you are clear with that. Simple things. I repeat, this is nothing but you are providing online money gaming or you are supplying OIDR services from a place outside India to a person in India. Simple, just remember that. You have to follow GSTR 5A. Next month 20th you have to file. Okay, OIDR services, whether the recipient is non-taxable online recipient or whether that fellow is a registered person, it doesn't matter. So in short, in simple words, we can say online money gaming, OIDR services, both to a person in India from a place outside India, that supplier has to file GSTR 5A. So these are the amendments related to returns. So with this we are done with returns chapter also. So let us move on to the next chapter, e-commerce transactions, amendment number 32. So the amendment number 32 is nothing but, see, simple, as we have already seen this. Through e-commerce operator, even the unregistered suppliers of either services or goods now are eligible to make supplies. So e-commerce operator, because they are unregistered person, need not collect tax at source, so TCS will not come into picture. But for the registered persons, obviously the tax collected under section 52 will be filed electronically in GSTR 8, and opposite fellow will claim it in their e-cash ledger. That obviously you know that, so nothing great there. Next, here there is a clarification. The clarification is regarding, see, seller is listing his goods in one e-commerce operator. This fellow is using another e-commerce operator, and buyer is buying using that e-commerce operator. Okay, the supply is going like this, from supplier to one e-commerce operator, another e-commerce operator, and finally to the buyer. In this case, so when there are multiple e-commerce operators involved in the transaction, the doubt was which e-commerce operator has to follow this section 52 provisions, that is TCS compliance, who should take care. Then the department has clarified, in such cases, whoever is making the payment, releasing the payment to the supplier. So generally the supplier payment is released by this e-commerce operator. So this e-commerce operator will be liable to collect tax. So section 50. Very simple. When multiple e-commerce operators are involved in one single transaction, then whoever is settling the payment, whoever is releasing the payment, the person who finally releases payment to the supplier, that e-commerce operator is the e-commerce operator who has to follow section 52 compliances. So that is what the clarifications, right? Now they have said again, sir, supplier himself is an e-commerce operator, sir. he is using another e-commerce operator, and that e-commerce operator is making the sale. Here also the logic remains the same. The supplier himself is an e-commerce operator selling through another e-commerce operator. Then this e-commerce operator only will make payment to this supplier. Then this will only has to follow section 52 provisions. Simple. Logic remains the same. Whoever is settling to the supplier, that e-commerce operator has to follow section 52 provisions. Simple. That is the another amendment, right? So now next one, guys, this is an amendment related to section 9 subsection 5. If you remember, supplies made through e-commerce operator is liable to pay GST. Okay, if you remember, in that we have discussed the services, SAR services, transportation of passengers, housekeeping, accommodation, restaurant services. In that a small change has happened. Earlier it was like transportation of passengers by radio taxi, motor cab, maxi cab, motorcycle or omnibus, like that it was there. Now what they did, they have removed this omnibus from this particular entry and they have made a different entry. That means now understand, if you are transporting the passengers through same thing, radio taxi, motor cab, maxi cab, motorcycle, through e-commerce operator is liable to pay GST. That is routine. Omnibus alone we have removed from that entry and we have made a new entry. Why? Because the reason is why? Because the reason is, here they want to give some relaxation here. That relaxation is nothing but, if you are transporting the passengers by omnibus using the e-commerce operator, and if you are a company, you can happily discharge your GST liability. You can pay your GST on your own. But if you are not a company, let us make the e-commerce operator himself liable for paying GST. That means just to give some relief to e-commerce operator, or we can say to just make sure the burden is on the supplier only, because the supplier is a company. So simple, the amendment is now transporting the passengers. Transporting the passengers by radio taxi, maxi cab, all these things remain same. But if it is transportation of passengers by omnibus and the supplier is an company, supplier is liable to pay GST. No sir, supplier is anybody else, then e-commerce operator is liable to pay GST. The simple one example, let us see here. Sir, Vivard Travels Private Limited is providing transportation of passenger services to Mr. Sanchar. That fellow is booking the ticket through GoIbibo. Transportation of passengers using the e-commerce operator. Now supplier who is transporting the passenger through omnibus here, Vivard Travels Private Limited, a company, correct? So who is liable to pay GST here? Vivard Travels Private Limited is liable to pay GST. Clear? No sir, that same fellow is booking the bus through GoIbibo only. But who is the person providing this services to Mr. Sanchar? One fellow is sole proprietor, transporter is there. So his name is also like Transformers Travels, sole proprietor. And he is having one single bus. He is like operating it between Chennai to Bangalore, something like that, assume. That fellow also listed in GoIbibo. Sanchar is going there and booking the ticket in GoIbibo. Now on this, who is liable to pay GST? GoIbibo is liable to pay GST. That is what the concept, right? So that means transportation of passengers only using the e-commerce operator GoIbibo. Both of both the cases, you are booking the ticket through GoIbibo only. But in one case, the person who is operating this bus and supplying these services is a company, so company is liable to pay GST. The another case, it is any person other than company, so e-commerce operator GoIbibo will be liable to pay GST. That is what the scenario here. Yeah. So that is what the last amendment in this e-commerce operator, right? So with this, we are done with this e-commerce transactions chapter and done with this amendment number 34, right? So let us move on to the next amendment number 35. Hope it is clear for you till now. So let us continue. So this amendment number 35 in import and export and GST, see, just because there we are discussing, otherwise from exam point of view not that greatly relevant. So this one is regarding, obviously you know, so when you are making the exports, you have two options. One is you export it without payment of GST under LUT, or you export it with payment of GST and take refund of IGST paid. Okay, now here the point is, on certain goods and services, sir, which are notified, so you can do this, export them on payment of GST and claim refund of tax so paid. But on certain notified goods, that is pan masala, tobacco, and few essential oils like peppermint, spearmint, watermint, horsemint, etc. On these things, you have only one option, that is pay IGST and claim refund. You cannot export them without payment of tax under LUT. So you have to pay tax and then uh, sorry, on certain notified goods you cannot export them with with payment of tax, and you cannot claim IGST refund. You have to straight away what, you have to export them or supply to special economic zone under LUT only. That means in these cases, so if you want to export or supply these things to SEZ, you can do that only under LUT. So only under LUT. You cannot do that by paying tax and you cannot claim IGST refund. So that is what the point. So what are those? Like pan masala, tobacco products, or few essential oils like peppermint, spearmint, watermint, horsemint, etc. In your statutory update, they have given various other products also, that like I mean list of them in detail, not relevant for you, nothing to worry. Right. So next, what is next one? Another a simple amendment. Normally, you know, when you are exporting the services, one of the condition is that you have to receive the payment for such services in convertible foreign exchange, or in certain permitted cases by RBI in Indian rupees also you can receive. So in some cases what has happened, sir, Indian exporters who are exporting the services uh, are receiving the payments in Indian rupees from special rupee ostro accounts from the partner trading countries opened by authorized dealer banks. Okay, and obviously we have just now said, sir, you can receive that in foreign convertible exchange or in Indian rupees where it is permitted by RBI. So in this case, yes, if you are receiving even in Indian rupees which is permitted by RBI, that is from some special rupee ostro accounts which are maintained by authorized dealer banks, all that stuff, then still it is treated as very much you are fulfilling the condition, you are fulfilling the conditions for export of service. Okay, so no need to worry, it is still a zero rated supply and you enjoy all the benefits, continue to enjoy them. Okay, so that is what the point. So no problem even though you have received that in Indian rupees from special ostro account, right? So that is what the clarification there. So with this we are done with import and export under GST. Next, let us move on to the next chapter, refunds. In refunds also small amendments. This amendment is regarding a refund of your accumulated ITC balance. Just a small clarification, sir. Accumulated ITC, I am applying for refund under section 54 subsection 3. Sir, whether you will give me that as per GSTR 2B or it is as per GSTR 2A. Okay, so they have clarified it is as per GSTR 2B only. That's all, nothing major there. So it is clarified that since availment of ITC is linked to GSTR 2B with effect from 1/1/2022, availability of refund of accumulated ITC under section 54 subsection 3 for a tax period shall be restricted to ITC as per those of invoices which are reflected in GSTR 2B only, not 2A. So don't worry. Next. So if you remember rule 89.4, very important when we are discussing the class we have discussed. The rule 89.4 is regarding applying the refund of unutilized ITC balance because you are making the zero rated supplies without payment of tax and you claim the refund of unutilized ITC. In that case, when you are calculating that amount, the adjusted total turnover we will calculate, if you remember. While calculating adjusted total turnover, what should I take the value of goods exported outside India? Actually, under rule 89 sub rule 4 itself, there is an explanation saying that value of exported goods shall be FOB value or invoice value, whichever is less. We have discussed, if you remember. Same thing you should take even when you are calculating adjusted total turnover. So when you are taking adjusted total turnover, see, simple. When you are calculating value of exported goods for 89 sub rule 4, remember what should be the value? Value is nothing but FOB value or invoice value, whichever is less. FOB value declared in shipping bill or bill of export, whatever it is, or invoice value, whichever is less. So that is important. I mean, just they have clarified the same thing we have been following and you have to follow that. Okay, the answer is yes. So should we consider the adjusted total turnover as per this explanation? What's the query? The answer is now the next one, the next amendment. So next, amendment number 39. See, what is this all about? See, normally when we are exporting the goods or services, you export them under LUT without payment of tax. So as I was telling, when we are exporting the goods, out of India, we are making some export of goods or services, whatever it is. Sir, we are exporting it under LUT, so without payment of tax, And what you will do, you will claim the unutilized ITC balance as refund. This will be given to you, but the condition is, if you are exporting the goods, you should export them within 3 months from the date of invoice. Or if you are exporting the services, the condition is within 1 year you should have received the payment. Okay, so if these conditions are satisfied, then only you can claim this export benefit. But the point is the export benefit of exporting them without payment of tax, all that. But sir, unfortunately, due to some various reasons, I couldn't export the goods outside India within 3 months, or I couldn't realize the payment within 1 year for export of services. Then I have made the export without payment of tax. No, so I am only like, I understood I didn't satisfy the conditions of export of goods and export of services. So voluntarily I am paying tax. Now I am paying tax voluntarily, payment of tax. Now the problem is, sir, after 3 months also still I exported the goods, or after 1 year also, later on, subsequently in future, I have received the payment for services. Then, sir, can I claim this as refund? Can I claim this tax, whatever I have paid, as refund? Yes, you can claim this as refund, and you can claim this ITC also refund. But the problem is, while paying this tax, you should have paid interest also. Okay, that interest you don't ask refund from me. Okay, you ask refund of already whatever the taxes you paid, whatever the unutilized ITC. Here, see, I am giving you unutilized ITC also refund, even though you have exported it after 3 months, even though you have received payment after 1 year. But still, I am giving you the refund of that. But don't ask me interest also here. That is a punishment for you. Okay, don't ask me that interest also as refund. So that is what the clarification here. So whether subsequent to export of the goods or subsequent to realization of that services after the time limits, whether they are entitled for refund of unutilized ITC balance and also refund of IGST and interest paid earlier, whatever you have paid voluntarily, the IGST and the interest along with interest. Okay, then it has been clarified by the department that entitled to receive this unutilized ITC balance as a refund, no problem. Whatever the IGST you have paid earlier, also no problem. But I will not give you refund of interest paid. Hope you understood that you export the goods or services without payment of tax and you claim unutilized ITC as refund. But further, the condition is export should happen within 3 months. Export of goods should happen within 3 months from the date of invoice. That means goods should leave India. Or if it is services, payment you should have realized within 1 year. These conditions you have not fulfilled, then you are only voluntarily paying IGST. Okay, and interest also. For the IGST, the interest also you are paying. Now later on, after exporting the goods out of India, goods leaving the country, or after the payment receiving after 1 year, sir, you are asking for, sir, I paid that IGST, no sir, but it is without payment of tax only. Please refund that. Yes, I will refund you. Sir, unutilized ITC balance now will you refund? Even though you have failed to fulfill the conditions, still with kind heart government is giving you that refund of unutilized ITC balance also. But interest you don't ask. That is what the concept. Clear? Right. Next. So that is what amendment number 38, and that is what amendment in refunds. With that, we are done with amendments in refunds. Let us move on to the next one. Amendments in the chapter demands and recovery. A simple amendment. See, simple. Here the amendment is nothing but, see, normally when the recovery proceedings were initiated by the department, if the proper officer has given any order for attachment of any property, whether it is movable property or immovable property, that provisional attachment, that means the encumbrance is created in the favor of the department, that encumbrance shall be removed only on the written instructions from the commissioner. Okay, now let the encumbrance shall be removed or the provisional attachment will be removed. Then like that, if the commissioner is giving the order, then only it was released. Now the amended sub rule, that is 159 sub rule 2, says that encumbrance can be removed. Encumbrance can be removed either on the written instructions of the commissioner, which was the old one, is the old one, or after the expiry of 1 year from the date of issuance of order of provisional attachment, whichever is earlier. That means if the commissioner has given written instructions, okay, remove the encumbrance within 3 months, no problem, removed. Or sir, commissioner has not given that, 1 year over, automatically it will be removed. Clear? So the encumbrance created on a property, that is a provisional attachment done on any property, whether it is movable or immovable, when the recovery proceedings were initiated by the department because you are not paying the tax dues, etc., etc., then that can be removed only on the written instructions of the commissioner, or 1 year from the date of order of that provisional attachment, whichever is earlier. So with that, it will get removed. Okay. So if you give the order within 1 week, 1 month, 10 months, fine. Or after the expiry of 1 year, automatically it will be removed. The encumbrance shall be removed. That is what the amendment, a small amendment in demands and recovery chapter. Right. So with this, we are done with that. Now we are moving into offences and penalties, and 2-3 more amendments. That's all. We will be done with this. So offences and penalties. So coming to this next amendment number 41. So amendment number 41. So this is simple amendment. See, normally you would have remember this like compounding of offences. This is provision relating to compounding of offences. So compounding of offences is allowed by the proper officer, that is the commissioner, only when he is satisfied that you have cooperated with the proceedings and you have made full and true disclosure, then only compounding of offences was allowed. Sorry. Now the amendment is very interesting one. If the applicant has made full and true disclosure of facts, then it is sufficient. Commissioner has to allow compounding. He cannot say you have not cooperated to me for the proceedings. Like that he cannot say. If you have made full and true disclosure, obviously he is supposed to give you compounding. The compounding application can be accepted only on that. No need to worry about whether you have cooperated or not to the proper officer, right? So that is what amendment number 41. So we are moving to last but one amendment, amendment number 42. So amendment regarding compounding of offences and the penalties, all that. Okay. So if you remember, compounding of offences, when you are going for compounding of offences which are given under section 132 subsection 1, depending upon the type of offense, all the stuff, so compounding and the amount, all the stuff, so they have prescribed the fees for the compounding. So the compounding fees shall be, and you know, minimum 25% of the tax involved, maximum 100%, as per the like the proper officer discretion, all that. So now the point is here, the government has prescribed actually through this new sub rule 3 how much should be the amount. Actually not exactly what should be the exact amount, but they are just fixing some criterias. The criterias are, you know, first I'll tell you simple, you know, 132 subsection 1 clause A, C, D, E, all this stuff, like we can compound the offenses. You cannot compound the offense which is given in section 132 subsection 1 clause B. This cannot be compounded, and if you remember, this is nothing but issue of fake invoices. Issue of fake invoices. So in this case, compounding not allowed, no compounding. Hope you remember this. In other cases, they have given the compounding. So as per subclause 1 and subclause 2, amount involved there exceeds 5 crores or it is between 2 crore to 5 crores. So what is the compounding fees? If you remember, like we have discussed, it is like minimum 25%, maximum 100%, like that the limits were there. Now the sub rule, new sub rule 3 is saying that, sir, if it is the offense, I will just teach you offense and the compounding fees. teach you offense, and then the compounding fees, what is prescribed as per the latest sub rule. Important for your exam. Please be very careful. It is important for your exam. Sir, if the offense is supplying the goods or services without invoice, or if the offense is availing ITC without invoice, or if the offense is collecting any amount as tax but not paying to the government, or any other offense where you evade tax, apart from these three, anywhere, any way you evade the tax or you fraudulently obtain the refund, then these cases, for these cases, if you have committed this offense and if it involves more than 5 crore rupees, and if you want to compound that offense, the minimum you have to pay 50% of the tax amount which is evaded, or ITC wrongly availed, or refund wrongly taken. Out of this minimum 50%, maximum 75% you should pay and compound it. Earlier the rule was prescribing, sub rule was prescribing, it shall be like 25% to 100%. Now they have prescribed it, the minimum you take 50% compounding fees, because the proper officers were misusing this power and taking the less amount, etc., etc. So they have just prescribed this minimum you take 50%, okay, of the amount involved, maximum 75. Don't harass them with 100%. Okay, sir, if the amount is involving 2 crore to 5 crore, sir, these cases, the amount is involving 2 crores to 5 crores, minimum take 40% of, maximum 60% of the tax evaded, or ITC wrongly availed, or a refund wrongly taken. Clear? So for these 4 offenses, what is the compounding fees now? For these 4 offenses, if the amount is exceeding 5 crores, minimum 50, maximum 75%. If the amount is involving 2 crores to 5 crores, that is greater than 2 crores but up to 5 crores, then it is minimum 40%, maximum 60%. Okay, so that is what the change. Sir, there are some other offenses which are given in clause F, H, I of section 132 subsection 1. False or substitute financial records or produces fake accounts with the department. Why? Because they want to evade tax, sir, with the intention to evade tax. Or you are acquiring any possession, or in any way you are concerned with transporting, removing, depositing, keeping, concealing, supplying, or purchasing, or in any other manner you are dealing with goods. Simple, you are dealing with goods. Which goods? You know, or you have the reasons to believe that these goods are liable for confiscation. With that type of goods, why are you dealing, right? So now you should suffer. So that is the offense you have committed. So you are dealing with the goods which are liable for confiscation, or you are receiving, or in any way concerned with the supply, or in any other manner dealing with any services where you have the reasons to believe they are in contravention of the provisions of this act. You are dealing with services which you know that these are in contravention with the provisions of this act. Then, so these are the category of offense. For these offenses, compounding fees is 25% of the tax involved. Okay, 25%. Compounding fees is just 25% of the tax evaded. So you pay that and compound the offense. And third category, the last category, is you are attempting to commit or abet the commission of any offenses A, C, C to H. Here we have seen, no, A, C, D, E, F, H, I. Okay, all these things of this section. That means you have not done them, you are trying to do them. Okay, so trying to do these offenses, okay, then you have tried doing those offenses, then for that offense 25% of the amount of tax evaded, or ITC wrongly availed, or refund wrongly taken, that you should pay as a compounding fee. So listen, so there are various offenses, we have categorized it into 3 things. First case, you go based upon the monetary limit. Remaining 2 cases you are not going based on the monetary limit. First case, for that A, C, D and E. Okay, for this, if the amount involved is greater than 5 crores, minimum 50%, maximum 75%. If it is 2 to 5 crores, minimum 40%, maximum 60%. And in this case, 25% of the tax involved. And if you are trying to commit the offenses which we have discussed about, the 7 offenses you tried, then 25% of the tax involved. You are falling in any two cases or more. Okay, the offenses are falling in two cases or more. So where the offenses committed by the person falls under more than one category, in such case, in which category the highest one is there you just throw him. Okay, that amount you have to pay as compounding fees. So the higher, wherever the higher compounding amount has been prescribed, that amount you have to pay. Clear? So that is what the concept. So that is what the change in compounding of offenses, compounding fees, sorry. So very important for your exam, please be careful with, right? So next, so with this we are done with the chapter offenses and penalties, and the last chapter appeals and revisions. Appeals and revision. So a simple amendment, the last amendment of this particular amendments lecture. So this last amendment is nothing but when you are filing an appeal, see, either the aggrieved person can file an appeal or the department also can file the appeal. So you are filing it is GST appeal 01 or GST appeal 03 if department is filing the appeal, and you have to do this electronically. You can also do it manually. You can also file this manually, may be filed manually when the commissioner is notifying, when it can be filed manually in such case, or the same cannot be filed electronically because the non-availability of the decision or order which has to be appealed. Sir, on the order which I have to go for an appeal, that order is not available for me, sir, physically. Sorry, that no, order is not available, or that decision is not available, sir, in such cases. So what I should do, I should take the provisional acknowledgement also. Sorry. So that order is not available or decision is not available in such case to be appealed against on the common portal. So then obviously that order is not available electronically, then you can go for manual filing, and once you are doing the manual filing, the provisional acknowledgement will be issued to you immediately. Yeah, so that is what the simple one. So nothing but you can go for an appeal manually when commissioner notifies, or when you don't have the order updated electronically which you want to appeal against. So if you do this manual filing, obviously a provisional acknowledgement shall be granted to you, a simple one. So these are the amendments for your May and November 2024 exams, right? So please be careful with what and all has been discussed in detail, which we said very important, and wishing you all the very best for your final exams. Thank you. See you all as chartered accountants. Jai Hind.